coming to 2030, Malaysia is already going to come into an aging population.
Don't even talk about 2030. Like in Penang, where I'm from, 2 out of every 3 people I see on the street have all got white hair. Wheelchairs, they're using tongkat, they're being helped along by their children to go to the restaurant. It's retirement central, bro.
It's gonna come very, very soon.
It's exploding.
Yeah,
okay?
and the best part is businesses are already thinking about premium healthcare rather than, but where does that leave the middle class? Where does that leave the,
So to prepare, because you have to prepare when 35, 40, 45,
Yes.
25,
Yeah.
you got to think about retirement already, right?
Yes.
So what is the one, let's not say one now, right? What is the manual for preparation? Okay, John Huo, thank you for doing this.
No,
First,
thanks for inviting.
First I went on your podcast, now you're on my podcast.
Okay.
But I think the key issue here is the fact that I'm keen to talk to you because of your work in investment markets. And you run your own fund, obviously. You've got your own account and you're registered in Singapore.
Yeah.
You just had your client briefing for the markets. And I think just maybe start with how you assess the year 2024 in terms of the wrap-up. But more importantly, markets is always about going forward, right? So where do you see the next 12 months and beyond?
I think there are sustainable changes, especially in the way interest rates are going to be the new normal, slightly higher. I mean, look at the economic prosperity after we had the bull run after the global financial crisis. Low interest rates, flush with money, and then compounded by COVID. Look at how much governments around the world have printed money, and that gave rise to a lot of, for the lack of a better word, speculative assets. The rise and fall of crypto, right? And you see now today, Bitcoin hitting all-time highs, right? If you were to trace back the root reason, a lot of this is excess capital in the markets. Most of my subscribers and also a lot of my clients, I tell them that I try not to look at individual year kind of outlook because, as I mentioned earlier to you, you don't know whether it's a sustainable structural change in the market or is it just a fad. And one thing for certain, I think the continuing trend of tech adoption, the continuing trend of higher interest rates actually forces businesses to think a little bit differently. And why I say that is because business has had to adapt to interest rate changes all this while. And I think the complacency is set in because it's such a prolonged period where, capital was just easy, VC markets, PE markets, people were willing to pay for something that was not profitable. But as interest rates, tighten, go higher, then you see a lot of people a little bit more cautious. So if I look at 2025 and beyond, what are the sustaining trends for the industries? Semiconductor, definitely. It has had an up and down cycle over the past 2 years. Food security is something that a lot of people took for granted. Prior to COVID, a lot of people took for granted. Third thing I realized is really how the dependency on China, and no matter what kind of rhetorics the US, incoming president or whatever the politicians say, you can never take yourself away from the China supply chain, right? And as China is changing from more of a fiscal development, infrastructure, kind of economic GDP growth, you see them moving into more consumerism. That's where it starts to get interesting. Yeah, especially consumer stocks in China. I think a lot of investors, they fear going to China after, the Alibaba thing. But something that we cannot take for granted anymore is food security. How are you going to feed 1.3 billion people? And that's where I think opportunities are abound, especially with this kind of cheap valuations today.
Yeah, just to dwell on interest rates a little bit, because I think for the average investor, they don't see, they think that asset prices necessarily are driven by things like earnings, things like GDP numbers, things like how well you do within the quarter. But I think what a lot of people don't realize is that asset prices are generally, in fact, primarily driven by liquidity, right? And
Precisely.
liquidity is driven by the cost of funds.
Yes.
And the supply of money, right?
Yes.
Which is obviously central bank policy.
That's right.
And the cheaper the interest rates or the lower the interest rates, the more money in the system.
That's right.
And now that we are coming back from, record high interest rates in the US, and they've already cut a few times, we'll still cut into 2025. I think the idea is that there's going to be more liquidity in the system and then more money that flows into what we call risky assets, which is the share markets, technology stocks and all that, right? I want to ask you because you talk about food security, technology, semiconductor,
Yeah.
and of course the China consumer story, right?
Yes, yes.
But really today, the themes which are really going gangbusters in terms of prices are your Mag 7 stocks,
Yeah.
right? Your crypto names, right? And that's overtly technology. That's the next frontier kind of thing, right? AI and the software that goes along with all those things.
Yeah.
For the average investor who wants to play those themes, right? Those themes are not necessarily in Malaysia, are they? Right? You've got to go abroad. You've got to go global.
And I think you brought up a very good point, and which reminds me of something I've always stressed in my investing philosophy, is really understanding, one is the value chain. Two is also this concept that I think is not pioneered by me, but a lot of other people. It's pick and shovels. So I'll share you an analogy. Like one of the biggest Chinatowns in the world is actually San Francisco. Now, if you think about it, why did the Chinese actually go to California and San Francisco? Was because of the Californian gold rush. But the guys who actually made money weren't the gold prospectors,
A lot of people died.
Yeah, a lot of people died, right? But the guys who really made money are the guys who sell you jeans, who sell you...
Levi's made a name, right?
Yeah, exactly. The guys who sell you axes, I don't know of any branded axes from that, right?
Yeah.
The shovels, the pixels and all that. And I think in today, when you look at the value chain, how this philosophy or concept sharpened was actually... I prefer not to name individual names, so I'll just give you in generic. So there's
why should you? You should. I mean, I will ask you.
I'm not licensed actually. That's why.
The thing is, everybody's got a point of view in terms of, should we buy an NVIDIA? Or what's the idea with NVIDIA?
Yeah.
I think in principle terms,
Yeah.
the whole idea behind AI, and obviously the godfather of AI, Jensen Huang, right?
Yes.
Some people might say the theme has moved away from chips.
Yes.
And there's usually a transition from hardware to software, right?
Correct.
So, I mean, in principle terms, you can talk about that.
Okay. So maybe I'll describe from a business perspective, then
Yeah.
you understand, and a value chain perspective. So, if I were to briefly describe the entire semiconductor value chain, you think of the godfather as the guy who comes out with the architecture, the chip architecture, right? So these will be guys who own IPs. So people like ARM, people like certain Taiwanese companies that own the royalty, the IP of the chip.
Well, the TSMCs, the AMDs of this world, right?
They're slightly lower down the value chain.
Okay.
So you think of the guy who comes out of the blueprint.
Yeah.
So this is a guy like ARM. Okay, so his business model is he's actually selling licenses for people to use his design.
Okay.
So it's very high IP dependent, not so much hardware. There's no infrastructure cost involved, right? As you move down the value chain, there's a guy that makes software. And the software is like, okay, if you go to a construction firm or an M&E consultant, the predominant software is this software called AutoCAD. So there's an equivalent AutoCAD software in the semiconductor world. And there's only 4 companies in the world that actually do this. And they charge you, so how often do you pay for your subscription service, Chong? Let's say your Office
Typically monthly, right?
Monthly or yearly, right?
Yeah.
These guys charge in engineering minutes, Chong.
Oh, shit. So the more you use, the more you pay.
So let's just say you go to the loo and you do the number 2 and you forgot to log off, then there's 15 minutes of your...
Shit.
That's the joke I like to use.
That's a lot of money.
Yeah, that's a lot of money, right? So there's guys who make software. Then only you come to the guys that, fabricate and build these chips. And so, even before that, so the NVIDIA guys, they realized very early on that for them to survive and to thrive, they didn't want to be saddled and burdened with the cost of fabricating a chip.
Yeah.
And to start a new fabrication, facility today, you're talking in excess of 10 to 20 billion for a new. So the one that TSMC is building in Arizona, it's in excess of 20 billion. So not many players around the world can do that. Even
20
Intel.
billion capex, $20 billion dollars, right?
Yes,
Factory,
$20 billion
right?
dollars capex, right? So NVIDIA will design the chip. They will buy that architecture from an ARM, okay, or a Qualcomm or whoever that has this IP. They use the software to design it. They'll design the AMDs, the Apples, and all this, the fabless of this world, and they will actually give these designs to guys like Samsung, guys like TSMC, and they will manufacture, or we call fabricate, the chip. So that's half part. That is normally grouped together as what we call front-end semiconductor manufacturing. Now, these guys like TSMC, they don't build their own machines. So they have to buy machines from ASML, they have to buy machines from LAM and all these guys in order for them to fabricate these chips. So I've just described half
Correct.
Of the value chain. Malaysia doesn't even come anywhere
Of course.
here,
We're
right?
just the testing, we're just the
At the back,
assembly
yes.
and all that, right?
Yeah.
Okay.
So
The thing is, what you're trying to say is because everybody's using a lot more technology, right?
Yes.
Whether it's smartphones, digital cameras, cars with chips. I mean, it's all about chips now, right?
That's right,
The
that's
future
right.
is more technology than today, right?
Yeah, that's
and the
right.
future will always be more technology
Yeah.
for the foreseeable future, right?
Yeah.
So things then what you're trying to do is profit from this mega trend,
That's
clearly,
right.
So rather than buy Nvidia, which is the most visible and the most expensive of the lot,
Correct.
there's the picks and shovels around it, right?
That's right.
Okay.
Precisely.
Okay,
Precisely.
okay.
And these names are normally, if what I deem, they are not media. They don't get enough media publicity as compared to the Nvidias, and they prefer not to be
Correct.
honest.
The engine isn't so big, lah.
Yeah.
But then the thing is, these are where you get your 3x, 5x, 10x,
Oh
15x,
yeah,
right?
yes. Actually, some of the companies that I mentioned, they have one company actually has 400x.
Okay.
Yeah,
Okay.
400x before actually.
Okay. Over how long?
1996 until today, probably about 409 times your shareholder return.
Well, that's about the same as Netflix or one of those big
That's
things,
right.
lah, right?
That's right.
So the thing is, you're an active fund manager, right? Which is basically you're trying to beat the index, right? There's two kinds of fund manager,
Yeah.
right? One is your index huggers, lah,
Yeah,
right? Your
yeah.
index linked
Yes,
fund managers,
yes.
and then you just do a little bit better, and then fine,
Yeah.
that's it. Investors are happy.
Yeah.
You're an active fund manager. The problem is 85% of active fund managers don't beat the index,
Yeah.
right? The S&P has done 15% on average for the last 15 years, right?
Yeah.
Okay. And Malaysia has done typically about 9 to 11 or so, right? The index, right? So can you beat 15% a year?
Okay, just a slight clarification first. I have a partner who has the full-fledged license to manage the fund.
Okay.
I'm partnering him.
Correct.
Yeah,
So yeah,
yeah.
but in general terms.
Yeah,
right?
in general
That's-
terms, yes.
in general terms.
So-
So active fund managers, they have to pick the right stocks.
That's
right.
right. That's right. And the S&P is actually one of the most difficult index to build, including the QQQ. Here's the struggle about an index. The beauty of an index is it takes the best performers, it averages out with the low performers, and you get an average anywhere between 9 to 11%, depending on which period you pick for the S&P.
Well, the
edge-
S&P has demonstrably done 15% a year
Yeah.
for at least the last 15 years.
No, it's average longer period is about 9.8 to 10.
Okay,
but if you
100
nitpick-
years, yes, but
yeah,
the last 10 to 15.
10 to 15,
Because it's done so well, right?
Yeah, exactly.
And
exactly.
obviously overwhelmingly driven by the Mag 7, right?
That's
I
right.
think 30
30 over
35%
percent, yes.
is
Weightage.
Facebook, Alphabet, Meta,
Yeah.
Google and Apple, all these
Yeah,
guys, right?
yeah.
The Mag 7, right?
That's right. That's right.
Yeah.
So the only way to generate alpha is not just the obvious names. One of the ways to generate alpha is actually your sizing allocation in your portfolio, because you see most of the time, I'll just describe how an index, especially a passively run index like S&P, is. How do they increase the weightage? So if it's based on free float market cap, right? The bigger the market cap is, the more the weightage it is.
The bigger
in
the
it.
weightage, right?
Right. But as a value investor, what's the basic concept of value investing? You should buy a company that's valued at $1, but priced at 50 cents. So you see, the bigger the index becomes, the weightage is bigger. But actually, it's determined by the price. It's not determined by the value, So for us as active managers, one of the strategies we have to do is when these companies that are obvious, but they are fallen out of favor, that means certain sectors, let's say food security sector, is out of favor, right? But the Mag 7s are driving the returns. These guys, eventually they will come back and be on the average valuation. Those are the times that you should swing on those sectors. We have a joke in the active fund management industry. If your cab driver, your auntie, your relatives are talking about the stock, it's exactly not the time to buy the stock. It's when they're on the operating table, they're about to die, right? Even though they're obvious names. Like, I give you one classic example. Okay, on my YouTube channel, actually, I studied this company called Adobe, right? In September, October 2022, they announced an acquisition to buy Figma, which was about 20 billion, 50 times sales, right? At that point of time. Wall Street balked at it, and they said, nope, they are crazy, right? From 500 over US dollars, the price went down all the way to 275.
Adobe share price.
Adobe share price,
Okay.
right? Business has not changed. At that point of time, on average, they were bringing in positive operating cash flow about 7 billion a year, which means they could actually pay off the Figma acquisition in about 3 years, 7 ma. 7 billion, 20 billion kind of. So
I mean, okay, so I'm an Adobe user, right?
Yeah.
And they charge you something like 300 ringgit a
Yeah,
month.
exactly,
A month. It's a
exactly.
bundle of stuff, right?
Yeah.
Your photo, your video, whatever. Right?
correct.
That's huge revenue, man.
Yeah,
7 billion, that's a
Yeah,
lot.
7, and that's operating cash flow, and then net off all your, but
So your free cash flow is amazing, right?
yeah, it's amazing, right? And here nothing has changed to the business. Yes, the acquisition may have proved a little bit too costly, right? Share price just tanked 500 something, 295. That's when you strike. I don't know if you remember when OpenAI announced, to the world AI, what happened to Google stock?
It crapped out.
Yeah, it crapped out, right? I bought Google when the PE was like 17 or 18 times.
Yeah, I mean, that's cheap
Right.
for Mac 7, right?
Yeah, for a Mac 7. So you see, there are markets for most parts. I don't agree with the efficient market hypothesis, right? Markets for most part, they are price forward, right? But there are opportunities that when markets are misprice a lot of these assets, right? That's when you strike. And that's where the patient game really comes. Like, a lot of times investors ask me, John, can you tell me precisely when this happened? I wouldn't know, right? Like, for example, how would I know whether Trump or Kamala Harris is going to be elected? I don't know, right?
You go to Calcis or you go to a poly market.
Yeah. You can place bets, right?
Don't look at the poll sites, okay?
Yeah.
They're all wrong one.
They're all wrong,
Look at
right?
the betting sites.
Yeah. There are a lot of things, especially in the economy and the macro world, you do not know. I mean, investors or people who profess they say they will know. I think
You don't know.
there's two kinds of forecasters, as Edward Chancellor actually said. Those who don't know and those who don't know, they don't know, right?
And those, the second one, are the most dangerous.
Yeah, exactly. But what we try to do in active stock selection is really this. We spend the time to understand the industry, and I like to use this phrase. It's called information asymmetry. So what do you mean? Information asymmetry means everybody has access to the information. But how do you take an opinion? How do you make a judgment call based on the same information, but you look at it from a different lens? That is where you make this difference, Like, people are telling me, hey, John, now glove, in Cantonese, there's a phrase, ham yi fan sang, the salted fish resurrected, right? Glove. I don't know if you heard of this phrase before. So,
What the hell?
yeah. The resurrection of the salted fish. That's how I would like to describe it. Okay. So, Glove had their glorious days during COVID and then came down after COVID.
Oh, dude, gangbusters, man.
Gangbusters, right? I've seen minted millionaires from Gloves. I've seen also people lose like tons of money, millions, in the millions, right? And then we have the Serba scandal and all that kind of thing. But by and large, what are the companies that withstand all of this? These were solid businesses, probably mispriced, right? Probably mispriced. And I mean, back to your question about there's various strategies, but I think the most common one and the most simple, it's not rocket science. It's looking for mispricing of a good business. That's all. It may come today, it may come tomorrow. You don't know, but how you prepare is understand those businesses, understand the value chain very well.
So your approach, you have a watch list already, is it?
I have a list of 150 to 200 stocks.
Which you already like, and you're watching for mispricing opportunities.
That's right. That's right.
Okay.
And this list, it's come over probably 16, 17 years of investing. Made so many mistakes strong because, everybody asked me, he said, John, what's the harm of investing in Malaysia and not in outside? I tend to encourage people to go outside. Very simple reason. They ask me, okay, John, what should I buy? You buy Maybank? You want to be safe, you buy Maybank. Okay? Largest bank in Malaysia, 109, depending on when you ask, 109, 120 market cap, okay?
Ringgit.
Billion. Right? Billion ringgit, right? So it's roughly about 8, 9 ringgit, 10 ringgit sometimes. So I asked them, okay, for Maybank to be 50 ringgit, what does Maybank need to do? That means he has to grow 5 times in size.
A shit ton.
Yeah.
Which is not possible in Malaysia.
Yeah, exactly.
Not possible.
So then they asked me.
It needs to grow in Indonesia, which is almost impossible.
Correct. You go to Indonesia or Thailand, whatever. But these countries, they want to protect their own sovereignty, their own banks or whatever. Why would they allow a foreign bank to come in, right?
Well, you would only buy Maybank if you're defensive, you want an income, right?
Correct.
Okay.
Yeah.
But if you're looking for growth, then obviously you're not going to buy Maybank,
So then let's just say what has been doing the best, and it's going to be part of my book. Hopefully release Q1 next year.
You're like Donald Trump, and I've got a book.
Yeah.
It's going to be a great book.
Yeah.
It's going to be a beautiful book.
yeah. Hopefully, pre-marketing, right, John? No, it's been the publisher, my publisher, a dear friend of mine. He's been pushing me to write this book for over 7 years, and I've not had the either the discipline or either the time to be able to do this. But coming back to this, so what has done very well for Malaysia are semiconductor stocks. Okay, a glove apart semiconductor stocks, right? You've got the likes of Vitrox, the Penta Masters and all that. But what kind of valuation are you buying into them today? You're buying them at 40, 50 times, And some would argue, but it's worth it because Vitrox used to grow at about 20, 25% every year, revenue growth, EBITDA growth, right? But now you see the influx of Chinese players that can make testers almost as fast or even faster than them. And where's your margin of safety? You're buying them at 40 times, where you can buy someone in the front end equipment probably at 20 times, 25 times. TSMC is 30 times, right? Vitrox is at 40 times. So you're telling me, in terms of risk, TSMC versus Vitrox? I mean, you just look at the scale of it, right? It doesn't make sense, right?
No discussion.
Yeah, it doesn't make sense, right? So again, that is something that Malaysia has, because obviously the government has a mandate to say, hey, EPF, 65, 70%. Invest in
Local,
Malaysia.
yes.
Yeah. That drives the valuation premium. You see, very big money, but looking for very few stocks. And then when it comes to the sukuk market, lagi lah, right? Sharia compliant, all this kind of. So when it's like fish in a market, right? If it's tons of fish, then price is raised to the bottom. But the fish is so few, then your empuras or whatever, it can be priced very, very high lah. So in a way, what I'm trying to say is this. Market transparency, pricing transparency, because of the fund flow, like what you pointed out earlier, right? That gives, I would say, fairer valuation prices on a global scale. Whereas in Malaysia, because you have got these big boys, these institutional guys, and then they've got their Sharia mandate, and then you're buying, these few good companies. Of course, valuation is going to be driven to a premium. We just have to recognize that, that is a fact.
It also used to be that one of the strongest arguments for investing outside of Malaysia is basically diversification, right?
That's right.
People are concerned about Malaysia, the ringgit, the corruption, all these things, right?
Yes.
And then people say, rather than buy Proton, you can buy Mercedes, you can buy Porsche, you can buy BMW, right? Yeah. Well, the thing is, nowadays, every single currency has a risk, right?
Yes.
And the risk is basically debasement, right? And every central bank in the world is basically using fiat and paper money, which is not backed by anything, right? Yeah. So then what is the proposition for investing in dollar assets or euro assets or yen assets? Every big central bank, OECD central bank in the world is debasing the currency. So then you ask yourself, well then bloody hell, everything is just built on fresh air and sunshine. Then what is of real value lah,
Precisely.
So then it comes back to what is next, right? Gold. Okay, so gold is possible, but then gold has got a limited application, in terms of divisibility, mobility, cost of storage, and all these kind of things, right? So then what's next, right? So as an investor, we're going to talk about retirement because that's the key thing here, right? People investing for the future, right?
That's right.
So what you do? I don't know. How do you think about it?
Okay, so let's look at. I'm so glad you brought up this question about currency, and you see, right? People,
I think a lot of investors, they don't think about currency.
Yeah,
right?
It's so important. It's a very important component, actually.
Absolutely.
Yeah, and if you look at what the BRICS bloc are trying to do, right? And the first salvo, one of the big salvos that Trump actually fired, that says any country that adopts a BRIC currency,
trade tariffs.
100%, right? So you see, I mean, the hegemony of the US dollar today is undeniable. I mean, I just joke with people: you buy coffee in US dollar, you buy onions in US dollar, you trade palm oil in US dollar, right?
You deal drugs in US dollar.
Exactly, everything. Yeah. You go Vietnam, they rather not take dong, they rather take US dollar, right? Universal currency. Actually, there's a joke I want to tell you, Chong. I was, in a previous life, I was working for Royal Dutch Shell, and I was stationed in Holland for about 6 months. And I had a Brunei colleague, and we ran out of euro, so we went to the exchange in Amsterdam, and we wanted to change Brunei dollar to euro, right?
What for? Nobody's gonna take it.
No. The best part was the person who picked up the Brunei dollar was like looking at it, and like she was trying to figure out which country this was from. I vividly remember it's like she was like looking at it. It's like, is this what you expect me to do with this? I don't even know. What
Bro, two different occasions. Right? I was in deepest, darkest India in Rajasthan, right?
Okay.
I was trying to buy stuff from this merchant by the side of the road in the desert, right?
Okay.
I took out US dollar. Her eyes went so big. Boing. She took it, bro. She took it, right?
Yeah.
Last year, Tibet, I was buying a beer. She was in some bar. Cool guy, right? Artist, little place, right? Ran out of yuan, So then I said, you take US dollar?
Yeah.
Of course I take US dollar. I took out my roll. He was like, okay, bring it on. How many beers you want?
Yeah, exactly.
Fantastic.
Yeah.
Worldwide, bro.
Worldwide.
South America, South
Universal.
Asia, Southeast Asia, whatever.
Yeah. So, in fact, actually, ironically, even though currency is a very important component, but it's something that we can't control as investors, especially so as retail investors, right? And that's where I think what I encourage investors to think about is really just a very simple equation. It's ROIC minus WACC. So I'll explain.
Don't talk like that. All this is Greek
Yeah.
to people.
Yeah, that's right. So ROIC stands for return on invested capital. So in very basic terms, is if the company or the business spends $1, how much after expenses, after depreciation, whatever, how much money am I getting back? So if I spend $1 to build a factory or to buy a business, whatever, if I can get back 20 cents, it's actually very good. Actually, if you can get back 20 cents on every dollar you spend, you're among the top probably 5% of companies around the world. Okay? Now, what is WACC? It just stands, it's a very sexy name for weighted average cost of capital. That means how much
Cost of funds, lah.
cost of funds, right? So if a business, I'm doing, let's say, 7% return, and my cost of funds is 7%, that means you have zero shareholder value, right? So what we do is, in very simple terms, we look for businesses that has an ROIC that is bigger than the weighted average cost of capital.
So then that's not the point I'm trying to make, because the point I'm trying to make is at the corporate level, you're doing these things which are obviously you can do your stock picking, right? But then once you earn in the dollar or the currency of the locality, right, you've then got to deal with the dilution of the value of that currency.
Correct.
So then you might say in America, if you buy a bit of Facebook, right, and it gives you whatever it is return, right, 10% return, right. But the thing is, the dollar's being debased by the tune of 10% a year because they're printing, and right now I think the debt is like 37 trillion or something, right?
Agree.
This crazy number, right?
Agree.
So then your net is actually kosong, lo.
Yeah.
Right.
So, but
In fact, they will say it's higher because you've got your debasement D value, which is 10%, and then you've got the inflation rate, which is another, say, 5%, argument's sake, 5%.
Yes.
So your hurdle is 15, right?
Yeah, yes.
So if your return on AR is 10, you're down 5% a year.
Correct. But all countries around the world are doing the same.
So that's my question, right? So if you think about investing,
Yeah.
right, you've got your basic hurdle is 15%.
Yes.
Basic, right?
Yes.
Where are you going to get that? And you've got to be earning that currency which is being debased. And we know how currencies have gone. The gilt has gone a certain way. The sterling has gone a certain way, right?
Yes.
So then how do you think about
Again,
retained value?
Yeah. Again, what are the alternatives? If you think about whatever you mentioned, gold, crypto, whatever, right? Is there a living, breathing, dynamic organism that actually generates shareholder value year on year? Because if you think about how assets are priced, gold, property, it's very determined by supply and demand. It's basic supply and demand. But businesses, what happens is this. You have a horse, which is the business. You put a jockey on top. The moment any currency changes, interest rate changes, business dynamic changes, this jockey and this horse can pivot, Whereas for a gold or any other asset classes that don't have this dynamic organism, how do they create shareholder value? You see, that actually Buffett wrote this very interesting article. I think it was Forbes 2014 or 2015. He actually wrote two baskets. One basket, all the gold in the world, and one basket is you could buy 9 ExxonMobils, okay? You could buy all the farmland in the US and whatsoever.
Yeah.
Which one would you rather have? All the gold in the world melted down. I think you could flood like how many football stadiums? I can't remember. And here you have 9 ExxonMobils, all the US farmland, all whatever agriculture value that the US is doing, and you still got some spare change, Where this evolves, agriculture technology, businesses that pivot into payments or whatever. Whereas this is just no industrial value. Yeah, store of value, but purely pure supply and demand. So I know your question is like, yeah, the debasing the currency, I'm devaluing my, but what other alternative asset classes do you have? And how do I look at it is really how this business, as a dynamic organism, how does it grow, create shareholder value? That's all. That's why any other asset class, if you look at today, dating all the way back to the 18th century to today, what is the best asset class that has returned shareholder value? It's really, okay, besides crypto it's shares. It's really shares.
The equity market, no question about it.
No question, right? So currency-wise, I think something that is not just prevalent for the US market is also being done in Malaysia. It's also being done in China. China is even doing more to debase the currency, right? They artificially deflate to make sure that they are still an export, export haven, make sure that the currency is at a low value and all that kind of thing. And, for us, we struggle because you look at the flood of EV cars in Malaysia. I don't know if you've seen the latest Facebook post that if you buy a BYD Auto 3, you bought it 130,000. After 1 year, you can probably only sell it for about 69,000. Means you lose 3 years of depreciation. 3 years of depreciation value for a combustible car in 1 year. So again, China.
Don't get me started on EVs. By the way.
I know. I'm not.
Goodness.
Yeah, I'm not
My
an EV.
goodness.
I'm not an EV. I'm not an EV fan, man.
Yeah.
Definitely not an EV fan.
But would you buy Tesla?
The share or the car? Just kidding.
The share, of
The
course.
share.
The
Okay.
share.
I think the beauty of what Elon has created is there's a lot of intangible value that we wouldn't see in the near term. I give you one example. Nowhere on earth has someone accumulated enough self-driving data as compared to Tesla.
Absolutely.
Right.
I mean, they're disrupting so many sub-industries.
Precisely.
It's incredible.
It's incredible. A lot of people forget that Tesla is not a car company.
No,
Yeah.
it's not valued as a car. It's
Yeah.
valued as an AI company.
Yeah. And I think the other thing that I really have to respect him for right now he's like discounting a lot of car prices, right? Margins, Tesla in the heydays, the margins used to be equal almost Ferrari, selling a car, 70,000, per car, US dollars, profit margins. But now they can afford to decrease prices because the real value is they'll charge you a full self-driving software, zero scalable cost to them.
Yeah.
For 25,000, for 27,000
Yeah.
US dollars. That's where I think a lot of people are discounting too much. There are definitely Tesla fanboys out there. I know there's there's one in Singapore. I think they call it there was a channel. It's just chicken something, chicken Tesla. I can't remember the name, but he's like a big Tesla fan, right? Yeah. You've got Cathy Wood, obviously, right?
Yeah.
But I think for me, I do own in my own personal portfolio a bit of Tesla, but where my risk for me is really key man risk. What happens after Elon leaves? That's something that I cannot quantify at the moment. But as a business model, I've heard too many stories, Chuang. I had a subscriber of mine. He used to work for Continental. There's this German company. They don't just make tires, Chuang. They make electronic modules, right? Whenever a Japanese like a Toyota or a Honda approach them, before they change any design, it would take 3 months to get the layers of hierarchy to change that design. The Tesla guys, he'll be on a call with them in the afternoon, right? And then they'll say, okay, hey, I know you don't have this module, but can you modify this and fit our purpose? These Tesla guys, within a week, they'll say, hey, I found a better way. Hey, you try this. So they're working in partnership with these guys. Whereas the Japanese owners, the Japanese automotive guys, it's like, I can't make the decision. I have to level it to the higher up and higher up. A lot of things get lost in translation. And that for me was really, really, really scary how fast Tesla moves, And I mean, this is at like really solid technical people working on a problem, working at how to improve the car, just a product. There's so much obsession on the product. I don't think many people can grow at that kind of scale. That's for me. Yeah.
So when you think about investing, right, you've got these, obviously there's a lot to think about. There's a lot of data to
crunch,
right? But that's just the corporate data.
Yeah.
You've got the macro data as well.
Correct.
Right? You've got the fiscal data as well, right? So I know your public portfolios, which you conduct for clients, is obviously very ring-fenced, very managed, very disciplined, right? I want to ask you about your PA, your personal approach, right? How do you, the fund manager, think about investing yourself?
No different from my clients. And actually, that's something that...
do you take on more risk, less risk?
Ironically, I take on less risk for my clients. I take on more risk for myself.
Of course, you have to, right?
Yeah. Yes.
So I want to get into how do you think about your own allocation strategy?
what I try to do is a lot of my clients, I mean, obviously they don't do this full time, right? Just to give you an example, just today, Burma's, right? Burma's is all-time low, right?
What is it now? What's the price?
That's one something, I think.
Huh.
Yeah.
What the hell?
Yeah.
What happened?
Yeah.
They were
so-
like $4 or something.
yeah,
Right?
but they gave the second quarter results was quite bad. You know, guidance forward was even and Adobe.
Well, the model lineup is getting old already. Like,
Yeah,
right?
yeah, that's right.
They're trying to do the more with the CX
Correct.
lineup, right?
Correct.
So that hasn't come in yet.
And the struggle for someone like Burma's is that they don't have much. They don't do the design. I'm pretty sure they have given their input to Master Japan and all that kind of thing, but they don't do the manufacturing. They don't do the design. They're like distributor, right? But because of that, they're not saddled with capex of a plant,
Of course.
right?
Of
And
course,
all that.
yeah.
And I think where this one you make a judgment call. For your clients, right? If his portfolio is in a -30 kind of position, how he has not built up the research to build up that kind of conviction. Whereas someone like me, it's like I'm looking at this day in, day out, spoken to management and understanding this. I think those are the scenarios where I'll be willing to take more risks because
At a personal level.
right? But for the clients, actually there's a rule for me. In the Malaysian market, we actually develop a sizing allocation where we don't go more than 15. Actually, we do even less, sometimes less than 10.
15 what?
15 positions.
Okay.
So that means on each position, you should not have more than 7% allocation, especially when you start.
Okay.
So that is a portfolio strategy that when
Per fund.
per counter, because we do private mandates, we don't do a fund. So let's just say, let's use a numerical easy example, 100,000. Okay, so that means if I have 7 stocks, right? If you divide on average 7 stocks, right, that size of allocation for the initial start, you should not exceed that. Because you think about it, if I size one position at 2%, what's the maximum I lose? I lose 2% only, If I make a mistake, I lose 2%. But is there a cap to my upside or not? There's no cap. You see? That's how, based on our strategy, our portfolio, that's how we protect the clients and take less risk for them. Like for us,
On a customer fund, right?
Correct.
So
For myself,
100,000, you got 50 positions, right?
yeah, if
At
it's 2%,
each
lah,
lah.
if 2%, yeah,
But
yeah.
personally, you can be much more concentrated, right?
I have 10 only.
Yeah.
My own, that one, I have 10. I'm tempted to go to 12, but
all those 10s are equities.
Apart from EPF, 99.99% of my wealth is in
Stocks.
equities. Yes.
And those 10.
Yeah.
Okay.
Yes.
And all overseas, all foreign?
Okay, so I manage for my mom, my dad, and all that.
But you don't mix your dads
No,
with the money,
we
right?
don't.
Okay.
Don't.
So
My
I'm
own
talking about
personal
John Huo,
one
yeah,
is almost 100% overseas.
Okay.
Yeah, almost 100% overseas. Most of my Malaysian picks are in my wife's name, lah. So in a way, that's where I diversify my portfolio, lah. Even my wife, there's this story I don't know whether I shared with you, Chuang. So one day I was balancing my wife's portfolio, and my son walked in on me and he said, "Dad, what are you doing?" And I was like, "I'm buying more QL." He said, "So what's QL?" I said, "Oh, you go there 3 times a week." So on Children's Day, that's how I educate my kids. So he's 7, right? So that day he was watching Nas Daily, and Nas Daily had this thing called PE ratio. He was watching PE ratio at 7. I don't know whether he understands it.
You lah, it's all your fault.
Yeah, it's not my fault, right? But here's the funniest part, Chuang. That day the mom gave him an allowance for Children's Day, 50 ringgit.
How old is this guy? 7.
He's 7, right?
Bloody
in school.
hell, man.
Hey,
So-
$50, no, that day, the food is not cheap, for the school that he is in, right? It's not cheap. So, but he managed to save $17, and then he walked into my room and my office, and he pushed $17. Daddy, buy QL. So again, in terms of to your question about my own that one, yeah, I don't invest very differently from my clients. It's just that maybe I'm a little bit more concentrated. That's all. Yeah. But the ideas are I don't have time to watch like 2,000 stocks or whatever. Right? There's no way. There's no way.
So I also have come to the same conclusion.
Yeah.
It's basically just a few names and just a few themes.
Yes.
And that's it. And
Yes.
that's just
Just
focus.
ride it through. Just
Yeah,
ride it through. I
yeah.
mean, like, I keep on thanking people, and I know you have an iPhone like me, so I have to thank. Whenever I see people having an iPhone, I thank them. Whenever
Bro, when I look at the numbers for this company, it is insane.
Yeah,
But
it's
the
insane.
But the biggest problem I have with this company, Apple,
Yeah.
is that 48% of their revenue is from this thing.
Yeah.
And to me, that's a big problem.
Okay. That's
How-
why.
How do you think about
Okay,
that?
so a lot of people still see Apple as an electronic device company. Actually, it's not. It's a premium lifestyle company. And no, really.
You sound like a PR person, please.
Yeah. No, why?
Journalists don't like PR people.
Yeah, I know. But my Apple has 4X actually.
Yeah.
4X. And I just give you some numbers.
Over how long?
2014. Buy and hold.
Just keep adding.
I wish Malaysian markets actually have this feature. It's called DRIP, Dividend Reinvestment Program. It's automatic. I don't even need to think. And
yeah, but doesn't it piss you off that when you get an Apple dividend,
yeah.
there's so many by the time you get after all the costs and all the deductions, it's like, what the hell?
Yeah.
Right? Hello. Right? Everybody takes the cut before you.
Yeah. But you know what's the ROIC or not? You remember that return on invested capital I talked about?
Yeah.
Okay, just to give you benchmark so that you don't, then you have a gauge where the number is. Most Malaysian businesses, if you can do teens, I buy already. I like that already.
So 11 or 19?
Teens meaning anything above double digit to 15.
Yeah.
If you can do that sustainably over 10 years,
15,
10 or 15, you are considered the elite group already in Malaysia. Okay? If you can do 15 to 20 over 20 years, you're considered the top 1% of global companies around the world. Okay? This guy is doing 50%, bro. 50%. I want you to think very carefully about it.
Why do you think Warren Buffett sold his so much of his Apple shares?
Many people speculate even why he is like, oh, the crash is coming. He's building a 300 billion position or whatsoever. Most people forget Warren Buffett universe of buying things is very small, you know. A lot of people.
I read somewhere that in the course of his 65 or 70-year career, he's only ever bought like 80 stocks, of which only like 14 have done well.
Correct.
So even for him, 14 on 80 is not great. It's like 18% success rate now, which is like, what the hell, right?
Yes.
Warren Buffett, right?
Yes. Yeah, but you see,
of that 14, only like 2 or 3 have done really, really well, which is one of these is this.
Yes, and you think about it, Chuang, if you study the grades, apart from, everybody is just talking about Buffett, Munger. There's so many other grades. Joel Greenblatt did 40% compounding over 20 years, but he's not a media
his
folklore.
PR machine isn't so good.
Yeah, his PR machine, right. Renaissance Technologies did 69% compound over 20 years, and they don't want PR because the fund is only for their own in-house employees. You can't buy. You are an outsider. You cannot buy into their medallion fund. So, coming back to this, I liked it that you point out that even Buffett is immortal. It's not immortal, right? Peter Lynch actually said this once. If out of 10, you get 4 to 5 right, you're great.
That's a miracle already.
Yeah, it's already great, right? And if you can do, like for me, if I look at it, my lousiest 10-year US portfolio, the lousiest position is 1x. The rest are 7, 9.
Yeah.
And I just I show you my portfolio, right? I just like, did I do rocket science? Nope. I did a lot of work up front, and I just held through it. Right?
You're just riding the whole wave. And I think a lot of people don't realize.
Yes.
The biggest themes of the last 20 years is tech. I mean, you can't run.
You can't run away. Exactly. And I mean, you look at, my dad's.
It's not exactly rocket science. You just buy any one of those 7 names.
Yes.
And, Bob's your uncle.
Yeah, Bob's your uncle. And, whatever, you see media, and no pun intended, because I know you're a media practitioner, right?
The media stocks are the worst. The crappiest stocks. Don't touch them at a 10-year-old.
Exactly. So, but actually media, I read something very interesting, but obviously I need more verification on this. It said media did not report on business news probably about 50 years ago, Right? Prior to this, media was just reporting about daily happenings and all that kind of thing. But the moment, the stock market, technology grew, you had more real-time data, and that's where you created 24-hour channels on economy, on business, or whatever. So you have to think about it. The media business is to sell views, So anything sensational will buy views. But where you talk about boring stuff like study a company, hold and buy and hold, right? You're not going to repeat that over 10, 20 years, right? It's not going to sell you media. So again, what is your sources of things that you read, right? Is very, very important. Like a retail investor, right? What saddens me, Chuang, and I had the privilege, training with Bursa, in partnership with Bursa. I trained more than 6,000 to 7,000 people. Bursa used to sponsor them for free. And what saddens me a lot is I meet 50, 60-year-olds, right? They come to our class, and I said, John, how I wish I known you earlier or whatever. And when I asked them, what sources of information you get it from? Newspaper. You see? And I don't blame the newspaper. They did not do any false reporting. But what do they report? Revenues, probably some revenue growth, probably some net profit. Did they talk about the balance sheet? Nope. Did they talk about the cash flow? Nope. Did they talk about the industry? Nope. You see? Unless you find, you read The Edge, which is like, very Klang Valley centric. They probably have a
But
column piece.
even then, it doesn't really tell you the truth about financial markets, which is the fact that asset prices are driven by the amount of money in the system.
Precisely.
And for a long time, I just honestly, for me personally, right, it's only been the last 3 or 4 years that I've like,
aha
this
moment,
is how
right?
it works, idiots. Do you know what I mean? Before that, I was like, oh my god, hurricane here, cyclone there, this corruption there, that scandal there, this one. Oh my god, stay away from this bloody thing.
Yes.
It's scary, right?
Yes.
But the thing is, if you study the performance of the share markets, do you realize a lot of people say, oh, what happens if this happens, that war is going to zero? Well, the truth is, in the last 30 years, every time the world has been on the brink of something, or the world has collapsed because of something, they come in and save the world with cheap money.
Correct.
So that's the problem now. You've got $36 trillion of debt on the US government balance sheet, right? And then you ask yourself, how does it all end? Do you know what I mean?
Yeah.
So
Everyone's kicking the can down the road, actually.
I asked the fund managers. Okay, I asked the CIO of a bond, this company in Malaysia, I'm not going to say even Malaysia, right?
Yeah.
They've got 80 billion AUM.
Okay.
This is the number one bond.
Yeah.
So I asked her, right? I said, what'd you do with your savings?
Yeah.
You know what she told me?
Fixed
I
D.
was expecting, exactly. FD. I said, huh? FD?
Yeah.
She's so risk oriented.
Yes,
And the thing
yes.
is, she doesn't, so.
Actually, I have a chart. Too bad I can't show it here, Chong. But
But that's so wrong. I mean, what are you going to get from FD? 3.5 if you're lucky, right?
Yes.
Your real inflation is at 5.5, 6.
Yeah.
You're losing money there already.
Yeah.
And then you're losing money every year because your ringgit is just crap, right?
Correct.
I think every year 2-3% you're losing to the Sing dollar.
That's right.
And Sing dollar is benchmarked to the US dollar, which is depleted by 15% a year. So in Malaysia, our real hurdle is somewhere in the region of 20-25, right?
Yeah.
Right? You just go and buy char kway teow now.
Yeah.
$9 char kway teow.
Yeah.
Hello. What the hell, man?
Exactly.
Do you know what I mean, right? So if you're an investor, you think to yourself, what the hell? How the hell am I going to beat the hurdle of 20-25%?
Correct.
Yeah,
It's going to be very, very, very tough. Even Munger said if you can do 12 over the long run before he passed.
That's still how you're losing half your money in Malaysia.
Yeah, exactly. And in Malaysia, I'll tackle the part where you mentioned about fixed D first, okay? There was a chart, okay, that I plotted. Amount of money, M3 money supply that Bank Negara distributes. For I think when it started in 1974, when they published the data, it's about 8.3 billion. Okay, today is in the trillions. Okay, and the compounding rate of M3 introduction in Malaysia is roughly about 12 to 13%.
Yeah.
Okay.
Oh shit. Okay. So ARR 2025 is too low.
Yeah, it's too low, right? So here's the best part. If you correlate that chart of M3 increase in M3 money supply against fixed deposit, it's a direct correlation. That means the more Bank Negara introduce money supply, the more fixed D goes up, Okay, so to your point about you talk to these financial market professionals. That's what they do, and I'm not surprised. I'm actually definitely not surprised because I was surprised before I joined this. I was an engineer, Chuang. You know that, right? And I thought that, hey, come on, it cannot be, it has to be something better than fixed D. Your inflation is purchasing power parity is going down the road. But more and more I get involved in this industry, then I realize, right, the listing lawyers that, I helped list a company before, and the listing lawyer, because it's listed so many companies, okay, some not so good, some bad, right? Totally out of the share market, right? Bought properties, and then now stuck. It's like, John, so much liquidity is stuck here, stuck there, okay? Obviously better than fixed D, but to your point, I think if I were to boil all this down, Chuang, it's one word. Is understanding risk, perception of risk. Because they think that the fixed D, it's risk-free, capital protected, principal protected, whatever. But
it's not really though.
Okay.
It's not really.
I know, right? But in their minds, that's it. Because what else protects my money? Why? Because if you think about most of these guys, Chuang, and no pun intended to employees. I was an employee before. Usually,
we're all employees.
Yeah, right. Their source of income is only a single source of income. So when you only have a single source of income, you have a psychological affinity to want to protect it. And I went through this when I left my employment, I was paid pretty well, right? And when I left my employment, that was the first thing this fear, this paralyzing fear that, oh crap, I don't have a salary next month. Okay, this is my money. It's dwindling. Right? It's very fast, right? And then there are times when you question yourself, did I really pick the right path of coming out to be an entrepreneur and all that kind of thing? Then I realized one thing. Most entrepreneurs get this. They never have a single source of income. And when they never have a single source of income, they've developed this appetite or muscle to create value and they get paid, right? And because of that, their perception or understanding of risk is very different from an employee, you see. And that's where like, no pun intended, I was an employee, right? And I was like them. A lot of my employee clients, right? The moment they see like there's one prospect I talked to, John, my funds are doing really bad. I go look at it, minus 5,000 ringgit or 200,000 fund. 200,000 is minus 5,000 ringgit. I said, oh, my funds are doing really. I thought it was like minus 30 or minus 40. So you see, right? In the past, I wouldn't have been able to empathize. Now I'm like, okay, this is how they look at risk, right? And it's more of a psychological barrier rather than you don't give them numbers. It doesn't work, Chuang. It's a psychological thing. That's why Morgan Housel, when he wrote that book, Psychology. Wonderful book. For those of you who have never read it, I highly, highly recommend you to read it.
If you don't have time to read, just go and look from on YouTube. He's talking all the time.
Yes. And it's like, and I see that behavior, whether you're American, you're Danish or whatsoever, you'll be surprised. It's almost the same. Because human psyche, it is, we think we are objective and logical, but most of the time investing is really about temperament, sad to say. It's really about temperament.
And one thing that Morgan also talks about is the biggest impediment to wealth accumulation is FOMO.
Yes.
Right?
Yes.
Oh, my friend, my classmate just bought BMW. Oh, they just moved to CITYPlus City.
Correct.
Oh, he's wearing a Armani t-shirt. I must buy also.
Yes.
Oh, they're going to go to London for holiday. Walao, I don't get to go to London. Okay, go and buy London ticket, credit card. Boom. Right? Oh, his kid is in Champaka. Oh, I must send to garden school. Actually, Chong Fan, you're just paying for all these things just to keep up, right?
Yeah.
FOMO ma? FOMO ma? YOLO FOMO, whatever you want to call it, right?
Yes.
After that, where's your money all gone? There, garden school, Champaka, London.
No savings on.
More savings, eh?
More savings. And
they can be earning a shit ton of money.
Correct.
Bank account, eh?
Here's the saddest part, Chuang. I add in one more thing from an angle. Most of these conservative savers, right, they put in fixed D, they come to retirement. Then they realize, oh no, not enough. Okay. Do you remember MYAirlines? Okay.
Oh, yeah.
All right. You know how much they raised? I follow that quite closely because for me, I feel very sad for the minority shareholders that put in money. But think of what was on the table, what was offered.
MYAirlines is always a private company, right? So it's placement to rich people who could afford to lose it anyway,
correct.
Right?
Yes and no. Because if you read the profile of those guys that were invested,
some staff was also in there.
Oh my God. So some of them literally gave up their whole life savings. Okay. And what was on offer on the table was this. Okay, Chuang, let's say you run a business. In business, there's only two ways to raise money. Either your own money, which is equity, or you raise debt, right? Now, if you raise debt, you are paying people back interest rates. So that's safeguarded. Your capital is somewhat protected, a bond market or whatever. But if you take on equity, if you're exchanging equity, what are these guys buying? They're buying the risk that they may lose it, but they're also buying the possibility they can gain when it grows. So what was MYAirline offering? They're offering an 8% return, dividend payout every year, okay? Over and above a convertible equity, So I want you to think very carefully. You're a business owner. You're paying interest rates on the debt, but you're also giving them equity on the upside. Why would you do that if the business is so good? So you ask any businessman, they straight away they will understand this, But for an investor, it's music to their ears,
It's a scam,
Yeah. Right? It's a music to their ears, because
too good. If it's too good,
it's too good.
True. Yeah.
But how do they know? Here, that's a deeper question I want to ask. How do they know it's too good? For businessmen, they know it's definitely not. It's impossible that you give equity plus you give. That's why there's bonds. That's why there's equity. Equity, you can be wiped out.
If you give an income, you don't give it the share.
Exactly. It's simple, right? But for the retail investor, how would they know this, you see? That's why for me, right?
Geneva Gold, right? 30%.
Yeah.
Where got such things?
Exactly.
Right?
I mean, and again, whenever I look at this, right, I try to reflect back. What do I see differently from the rest? And I'm trying not to play a judgmental game because it's very easy to judge. Hey, you are not smart enough, you're not sophisticated. No. But what was on offer? What was the psychological behavior that they actually, for the lack of a better word, manipulated? And what was the thing that was the investors were looking for? You see?
You know what, John? I want to ask you.
Yeah.
Your parents, right?
Yes.
Okay. For our kids, we went through the school, right?
Yeah.
We go to school, we learn ASK, we learn sejarah, we
Yeah.
learn geography, fine, sure, right? But to me, the most important life skills, they can be counted on one hand.
Yeah.
Financial skills.
Yeah.
Financial skills.
Absolutely.
How to manage your money, how to grow your money. Social skills, because you need people to make it in this world.
Correct.
If you're a bit of a social, let's just say dungu, you can't make it anywhere, anyhow,
way.
right?
Yeah.
Third thing, for example, health, importance of health, right?
Yeah.
No one teaches you about health. You might go for PE, but then the principles of health management don't
Yes.
have, right?
Diet, all the kind of
Correct.
Yeah.
Fourth thing, if you choose the wrong wife, choose the wrong husband, game over.
Yeah.
Game over, right?
Yes.
Nothing in school about choosing the right person.
Correct.
What makes a good partner? Or
Yes,
something.
yes.
Instead, we learn about all these things.
Yes.
Is it a conspiracy to destroy the human race?
Uh,
Okay, that's a bit of a stupid overarching statement, right?
I understand,
Okay.
but I'm in alignment with you actually,
So then what's the point of going to school?
and that's why.
Social networks, fine, right? But these are the things which, if you don't learn, and some people they never learn this, right? Over the arc of their whole life, and then they come to 65, not enough money,
Yeah.
So retirement crisis in Malaysia,
Yeah.
global issue, not
Yes.
just a Malaysian issue,
Yes,
right?
yes, yes.
Yeah.
Yeah, and I mean, if you, there was, my parents are educators, so that's why I say this.
Rich Dad, Poor Dad, Robert Kiyosaki, right? Classic scenario,
I
right?
tell you, Chuang, I really have to thank that university senior that gave me that book when I was 19. I was doing my.
It changed my life.
It changed, completely changed. I mean, no matter what they say about Kiyosaki, he's a bankrupt, whatever lah.
yeah.
But my mind was changed forever lah, since that book, right?
Yeah.
And I'm trying to reflect of my upbringing, my parents, how they looked at risk. You know, my sister's a teacher. My parents were both teachers, right? But my dad had the privilege of leading a school, leading a business after he retired. And exactly to your point, you look at the classroom today. It has not changed since the Industrial Revolution. You know,
Yeah.
seating is the same, right?
It's industrial.
Yeah, it's very industrial. It's to create workers for large corporations, whatever. Okay, I give you another data point for you to reflect. So one of the things that in my previous business partnerships, we had a HRDF license, and we wanted to educate people about financial literacy, investment literacy, and we started knocking on big doors. And I don't want to name names, but big MNCs in Malaysia, we started knocking, GLCs, and you know what they say, John? Why would I want you to educate my employees to be financially more savvy so they can leave us? Literally.
No way.
Literally, Chuang.
So that was a bit of a Freudian slip. I don't think he managed.
Yeah, I mean,
intended to be so truthful.
He don't. That's sort of truthful. Maybe he was joking with me or whatever. Yeah. But you see, they were interested about communication. You look at the training, because I'm involved in corporate training as well, right? Look at the training they want today. In essence, design thinking, they don't talk about entrepreneurship. They talk about intrapreneurship. So you can have an entrepreneurial mindset, but bring those ideas.
Still be a macai.
Yeah, still be a macai, right? So you think about it, right? I don't know, it's meant this way or it's just status quo, but not many people are willing to go against the grain. And that's why whenever I see parents who homeschool, I really salute them. But I feel that there's another element. The 5 things that you mentioned, right? A lot of these things are not taught in classroom. And one of my own personal belief is this. My character development was really formed when I was in scouts. Competitive sports. Learning how to lose.
Yep. And coming back from defeat.
Correct. Learning how to lose gracefully, fair play. Right? A lot of these things, like you mentioned, social skills. How do you lose gracefully and how do you inculcate sportsmanship? You don't go and bash your opponent, right? Right?
You might, but no.
Yeah, you might, right?
Yeah.
But there's this respect of professionalism for the art of the game, and he was so good because he trained extra than me, 30% or whatever, right? Those kind of things, right? You don't get in a classroom, And where I find, and that's why I never, no pun intended to Chinese schools. I never wanted my kids to go to Chinese school because I knew that was their primary benchmark. Very academic driven, and when I was a recruiter in Shell, a lot of times it comes out in the interview. How do you articulate yourself? How do you do systematic thinking?
Yeah.
How do you have this clarity of thought to drown out all the fluff and just say that, hey, there's only 2 things there, 2 things at play, rather than just regurgitating whatever. Actually James Dyson said this best, right? He said if you give a child a golf stick and ask him or her to describe it, he will just give you normal things. But I said if you want the child to learn, right, ask him or her to break the golf stick. Then he will know about material strength, density, tensile strength, how it cannot break or how it cannot. That's learning by experimentation. And, that's something so difficult that, most schools don't encourage. Your kids, right? It's like, hey, Chuang, I think you better come and see the teacher. Your kids are getting C's, But that's the benchmark, you see.
Yeah.
And it actually translates very much into, how you manage your finance, how you look at risk, how you want to start entrepreneurship. I mean, like, you go to the US, the US is, okay, it's not perfect, but it's a great place to start a journey of entrepreneurship because they allow immigrants.
Yeah.
You think about it.
Yeah.
Japan has like taken a back step is because it's so homogeneous.
They don't want any immigrants.
There's no gaijins.
They'd rather die out.
Yeah.
than allow foreigners to come.
Correct.
That's how crazy it is.
Yeah. There's no gaijin, even
Yeah.
So, I mean, to your point about, education system, I think rather than flog a dead horse and blame the system, I think as parents, education really starts at home. Like, how I shared with you. I don't like, hey, my son, I said, I don't tell him, hey, learn PE or whatever. I just tell him simple things like, whenever we go to a company that I'm invested in, I just tell him a story of what this business does.
Yeah.
And that gets them excited, And, Buffett used to do this. He used to give Christmas gifts as company share certificates.
Yeah.
It encourages inquisitiveness, encourages that people, to take an interest. And he had this joke, he says, in the 1930s during the Great Depression or whatever, or 1950s during the economic bust and boom, said, what was the most sold chocolate bar?
Yeah.
And he said Snickers. And today, what's the most sold chocolate bar? Snickers. So how do you think about sustainability, permanence, and all that kind of thing? And that's how you should shape your investing philosophy. Yeah.
Yeah, so I want to talk about retirement because retirement is a crisis scenario all over the world and more so, not more so than in Malaysia.
Yeah.
I just want to talk about it with you as a friend because, John, I think people think, retirement is something to be aimed for. And once you hit a certain age, you're going to leave your job, you're going to play golf all day, drink cocktails, and then you're going to deplete your savings.
Yes.
I think that's very problematic. So at the first definition of retirement, I think that's problematic. Why? Because there's other things that come into the picture, right? Your personal sense of purpose, right? When you, I think a lot of people don't realize, especially for men, when you retire, you could have been a manager or senior manager or CEO, right? And then suddenly all your status, all your privileges, your secretary goes, your driver goes, and then suddenly you're Mr. So-and-so only. You're not getting the invitation. So then a lot of people don't realize in America, the biggest age demographic of suicides is men 65 to 75. They just their self-worth was so tied up in the job. Then now they're out of the job. They're like, who am I? Why am I alive? What am I here for? They might have the biggest P&L, be a balance sheet in the world. But then they off themselves, huh? What the hell, man, right? so all that whole thing. And then I think EPF has just rejigged the minimum savings rate for retirement. But they don't talk about what retirement means, right? So I just want to get you into your mind.
Yeah.
How do you, as a person, John Huo, as an individual, think about retirement?
Retirement means I can wake up and choose to do the things I love. That's all.
Yeah.
It's very simple.
Yeah.
I don't like to complicate with there is a certain number I attach to,
So having that number in mind also is problematic.
Yeah, yes. It is
It's
because
fallacious, yeah.
Yeah, because I think I love this concept that the Japanese have come out. It's called an ikigai.
Ikigai, your purpose.
Yes, your purpose. Because it doesn't just form based on what you want, your passion. It's an overlap between what society actually wants and what you can do, what you get paid for, right? That's perfect spot, right? And I think in today's world, I just look at my dad as an example. He didn't earn big bucks, right? I never had a chance to go overseas. Did I envy those? Yeah, I got into fights with him because at a 17, naive, very, very young, stupid boy, right? Like what you said, keeping up the Joneses, my friends were, today SPM final paper, probably tomorrow they want to plane to UK to do an accelerated A-levels program to get them into King's College or to get them into all that, right? Was I nervous? Obviously I was. It's like, wow, I've never traveled the world, what does London look like and that kind of thing, right? And here was the struggle. If you think about retirement, what makes you happy, right? If I look at you as a media practitioner, myself, I love tech, I love investing, I love my mind to be challenged. I need to be working on something, right? Retirement isn't what the industrial age defines. Work till 60, 55, your joints are old.
Get a gold watch.
Get a gold watch, long service award, and then you...
Cash in your EPF.
yeah, right. And a lot of midlife crises, a lot of these guys, right?
Buy the Porsche.
Buy the Porsche or buy
Get
the
a mistress.
Harley, yeah. I'd rather you buy the Porsche rather than having the mistress, though.
But that's the thing, right? That's what they do, right?
Yeah, exactly.
It was the thing to do.
Yeah. And because it's like, at that point of time, that's why they tell you, live a little, right?
Yeah.
Live a little, right? But here comes exactly what you're trying to do. And I felt that, actually, if I define myself, I'm living in retirement. I may not have the money, the pot that I want, that number.
So you have a number.
I have a number.
What is your number?
My number is about, it used to be 5, now it's 7.
Ringgit.
Yeah, right. Yeah.
Is that all?
Yeah, it's more than enough.
Yeah.
And
so how do you think about that? Okay, let's just say it's 7, right?
Yeah.
But you're still working.
Yeah.
You're still investing.
Yes.
Okay.
Yes.
You're still like every day looking at balance sheets and,
Yes,
annual reports, right?
Yes.
Okay.
Yeah.
Still allocating, still making decisions on
exactly.
whatever, right?
Yeah.
That's a brilliant life. Because I love investing as well.
Yeah.
I love the whole world of investing.
And I think that's what got you from law into the media journalism, business journalism specifically, and into this as well, right?
Look, nothing makes me happier than turning on, YouTube, because YouTube now is my receptacle, right?
Yeah.
I get access to these guys.
Yes.
I can listen to Stan Druckenmiller.
Yeah, for free.
For free, right? I mean, at no point in the last 50 years of my life have I been able to listen to a legend of investing.
Yes.
Who just spoke at the whatever club of New York. 2 days ago.
Yeah.
2 days ago.
And no, the best part is you get Nikolai Tangen, which is the CEO of Norges Bank, right? Interviewing. It's like, or you can get David Rubenstein of Carlyle. Actually,
right?
Yeah.
And as an interviewer.
Yeah, as an interviewer, right?
So the questions he asked is what is on the mind of the investor.
Correct.
Not as a media person.
Correct.
It's fantastic.
So again,
we're in a golden age right now.
Yes, exactly. And there is no excuse for you not to learn. As an individual investor, as a whatever, there's no excuse to learn. And here's the part of retirement where I ask these questions to my clients. I said, why are you stressed out? What's your career? What's your number? And every time I do that calculation for them, Chuang, they actually get very surprised. 2 ways. Either the number is too far off, or most of the time, 80% of the time, only that much? It's because they don't know how to optimize the money. Most of them, if you base your calculation based on fixed D or 3%, obviously you need a huge pot lah. Right? But if you know how to optimize, you know how to understand risk and balance that, you don't actually need a very big pot. That's what I'm trying to get at, you see, Chuang. And retirement is not just about. And my dad has done. I can't speak enough of my dad, and I really admire him. Typical Chinese man. We don't talk as much, but whenever he does things, and I observe in silence, right? He graduated at 12 years old. He didn't have a chance to go to university.
Oh, school lah.
Right. I attended his convocation as a 12-year-old. I attended his master's convocation at 15.
Wow.
Right.
Good
so
for him.
What did it teach me? He didn't have to tell me, hey, go study hard or whatever. He already indirectly taught me because of this. Okay? And even as a 72, he's 70 this year, he's still working. He's still consulting for a private school. It's not about the money. I can tell you, many people offered him much more with his experience, with his kind of know-how, much more money outside, right? But there's a purpose. He serves on the board of the Malaysian Christian schools, right? He's here. He'll help the Christian Association save money. He'll be in my house, But he comes here. He fights for budget for the Ministry of Education, Do they pay him? I said, Dad, don't forget to claim your air ticket. Because most of the time, he'll fork out his own money, right? Right, to come here, right? But is he living a purposeful life? Absolutely.
100%.
Right.
Yeah.
So there are times when I look back, right? While my parents didn't give me the kind of wealth that a lot of other people
I think generational wealth is a curse.
Yes.
Honestly.
Yeah.
Right? Because if purpose is one of the reasons why one does what one does, right? If you remove that purpose, which is basically the highest purpose is to feed your children. It gives me immense pleasure to feed my children with honestly made money,
And the best part,
right?
You can spoil them because you knew that you have the resources to. But not too much.
That's a high level. That's a more refined discussion, right?
Correct.
But the thing is, when you make money, then you can buy food and put clothing on your children. It's immensely fulfilling.
Absolutely.
But then what happens if your dad is the one who gave you the money
Yeah.
and you're using his money? Then then why are you alive, bro?
Yeah,
You know?
and here's the funniest part,
So
Chuang.
generational wealth I think, is a big problem. But a lot of people aim for generational wealth,
Yeah,
right?
yeah. I mean, look at
To
Buffett.
receive it and to give it as well.
To your point, exactly like what Buffett wrote. His latest letter, I don't know if you've seen it. It's a 2-pager. He's donating most of, and he actually said that his children,
Yeah.
after only 10 years of running their own endowments or charitable organizations, he had the full trust in them, because he didn't, Susie, his eldest, right, actually wanted a loan, 30,000 to renovate her home when she was younger, right? Buffett denied her,
Yeah.
Buffett denied her. And he said that you got to make your own money and all that kind of thing. Precisely
To
what you said.
realize the value
Exactly.
and the purpose that comes along with it.
Exactly. I'll share with you a story which I cannot name this family. The parents are billionaires, okay? And one day I brought them to a state to have a business trip, and I told them the most famous fish in this state is empurau, okay? And what struck me, okay, these guys are billionaires, okay? The son actually had to ask permission from the father whether we can order the fish.
Good.
I said, wonderful. This is
Good.
exactly what I wanted. So,
Yeah.
Right? And I'm saying this with so much compliments to how well this billionaire actually brought up the family. And there are times when I wish I could provide more for my son, but I also realize that, and my daughter as well.
But then if you give them that you give them more, at what cost does it come?
Precisely.
Right? That sense of
Precisely.
entitlement to
Yes.
realize, oh, my father can afford this, right?
Exactly.
So why study harder?
Yeah.
Why work harder?
Why work harder? Why have to crack my brain and just wait and chill, right?
Okay.
And I think coming back to your early question about that sense of purpose, right? I think here's the irony of it all. A lot of parents, they strive to provide so much for their children, but they forgot about their retirement. There's another problem as well. They give so much for their children, and then they give up so much.
And they deny themselves, especially those that come
Precisely.
from poor background.
Yeah,
Right?
exactly. And that's something. So there was a time, okay, I was probably 17, 18 years old, first year uni. And my father had a friend, he was teacher in another school, one son, okay, refinanced the house, took out all his EPF just to
Aiyo.
send the son to US to study architecture, right?
There's nothing left for him already.
And
right?
do you think
Old
the son
age, no money.
you think the son came back?
No. Left, right.
You see where I'm coming from? So sometimes parents think that, is this selfish? I don't think so. I think you should really safeguard your own and let your children understand the value of sacrifice, a value of constraints. This is the most important thing, right? Constraints, like, do you really need to go to Cambridge or Imperial? I entered the local
I
U.
would actually hesitate to suggest anybody going to a British, American, Canadian, or Australian university today.
Yeah.
Why? What are you going to learn?
Yeah.
What systems are you going to be put into, right? What industries will it be, delivered through, right? These are all old industries. And look at the worst performing economies in the world
Yeah.
are those kind of economies.
Yes, exactly.
Germany's in a world of pain. France, Italy, Spain, UK, America.
Yeah.
Well, not America necessarily, but Australia's struggling, right? Everybody's struggling.
Yeah.
Canada's in the shits, right? Do you know what I mean, right?
Yeah. And
So you want to go university there, and then what?
a lot of
Then they
people.
got hired a foreigner over you,
Yeah.
Huh? No.
And the best part about it, a lot of people don't realize it's a money education. It's
an
very
industry.
It's an industry. It's a very good money making industry actually. They serenade you with titles of professors, Nobel. Okay, no pun intended, but okay, if you get into Harvard and you really
Okay.
wanna
So my condition to my
Yeah.
kids is this: okay,
Yeah.
unless you get into the Big Ten,
yeah,
MIT, Yale, Stanford, Harvard,
Yeah.
right?
Caltech,
Wharton, right?
yeah,
Caltech, right?
yeah.
UPenn, right?
Yeah.
Or in Europe, at Cambridge, Oxford,
or the Ecoles of France,
Imperial,
yeah.
right? By all means, go. I'll sell my arm. I'll sell my backside to sit.
exactly.
I have to. Got no choice.
Yeah, exactly.
Because your future is assured.
Yes.
But if you're going to go to Sheffield
Yeah.
or Leicester,
Yeah.
why?
Or Sunderland.
Oh, forget it. Right? Sorry, forget it. I was in Leicester. What for? So it says LLB UK.
Yes.
So
yes.
what?
Yeah.
So what?
I tell you, you can do the whole thing in where Brickfields Asia College.
Correct. And then the money that you save
Yes.
will go towards your retirement, and everybody's happy.
And you can start this. Yeah.
So the correlation here, John, I want to ask
Yes,
you, right?
yes.
Because the parents who sacrifice so much for the children, and then when the children grow up and the parents get old, they then expect their children to look after them in old age.
Correct.
And that's a big problem because at the same time as you're dealing with your own personal living conditions at a time when inflation is so high, then you've got to juggle your parents.
Yes.
And your parents are getting old. They've got no money because they spent everything on you,
Yeah.
right? So the expectation for you to be a caregiver is unfound. It's almost impossible because you got to work.
Yes.
If you don't work, you got no money to pay for you, yourself, or your kids.
Yeah.
So it's a sandwich generation. So
That's
the
right.
whole system, the whole cycle is erroneous, and that's a polite word.
Yeah,
right?
and look
It's
at Hong
got to
Kong.
be relooked at.
Yeah.
So EPF, they don't talk about these things, right? The whole retirement discussion doesn't talk about these things, but it's all interlinked, right?
Yes, it's very
The
so much
sandwich
interlinked.
generation, the
Yeah.
retirement crisis, parental care, and the aged care, right? Because it just lends itself one into the other. It's a whole thing of causation, right?
Correct. And that's why I plead with those who want to sacrifice so much about to your children. Think about self-preservation.
Correct, because if you don't sacrifice so much for your kids, then you'll have more money in old age, and then you can pay for professional caregivers.
Precisely.
right?
And
Your children don't know how to perform the Heimlich maneuver,
yeah,
or to what are you going to do in the case of a stroke?
yeah,
right?
exactly. And
How will they have strength to pick you up if you fall down? All these things,
yeah.
real issues.
Yeah.
You know.
just imagine, I know I'm not going to be popular for saying this. If you're earning a 20K salary, right, and then you have to take care of aged parents, and they rather said, oh, I can't afford. Are you willing to give up a 20K salary just to care? Where's the money going to come from?
Correct.
Medical bills and everything.
Correct.
So
And then the insurance. Let's don't talk about insurance.
Insurance.
This whole right now it's a mess. Right?
yeah.
It's like 40 to 60% increase in the last 1 year,
Correct.
and another 40 to 60 next year, right?
Yes. Oh, that one is
Who can afford? And then after 80 years old,
Yeah.
no more coverage.
Yeah.
Right? I just sent my dad month and a half ago.
Ah.
Okay. Real example, right?
Ah.
2 nights in the hospital,
Ah.
MRI scan,
Ah.
colon flush,
Ah.
and of course a lot of TLC from the nurses.
Yeah.
You guess how much the bill?
20K? Yeah.
19.5.
Yeah. And that's self-funding or insurance?
Kaki.
No. If it's insurance, they'll probably charge you 40. Double.
Oh, what do you mean? Yes.
If
So
it's,
this
if you're
is-
paying by insurance, they'll
But-
probably bill the insurance company double.
In whose name, in which lord's name are you allowed to charge this much of money
And
to take care of old people? It's insane.
Yeah,
See, this is not sustainable.
yeah, this is not, definitely
right?
not. Yeah.
Let's not talk about climate change or DEI
Yeah.
or whatever, right? Sustainable is this.
Yes.
This
yes.
is not sustainable.
And coming to 2030, Malaysia is already going to come into an aging population.
Don't even talk about 2030. Like in Penang, where I'm from,
Ah.
Tanjung Bunga, right?
Uh-uh.
2 out of every 3 people I see on the street have all got white hair, like me,
Oh gosh. Okay.
right? They're in wheelchairs, they're using tongkat, they're being helped along by their children to go to the restaurant. All old people, bro.
Yeah.
It's retirement central, bro.
Yes.
Old age central.
It's
Penang.
gonna come very, very
It's
soon.
exploding.
Yeah.
okay?
And the best part is businesses are already thinking about premium healthcare rather than, but where does that leave the middle class? Where does that leave the,
So to prepare, because you have to prepare when 35, 40, 45,
Yes.
25,
Yeah.
you got to think about retirement already, right?
Yes.
So what is the one, let's not say one now, right? What is the manual for preparation? What is your instruction to young people to prepare for a more financially secure future?
I'm not going to give you a concept. I'm going to give you a real life number example. Okay. A lot of people tell me this, John, I will start investing when I have money. So my joke with them is this. So you're literally telling me you will go to the gym when you're fit lah. Right. That's an irony. So and I give them, from there, I move on to this story, which is a very simple story. I said, a very simple numbers game. There's on one pot is 10 cents. On the other pot is 100,000. If you choose pot A, this 10 cents will double every day for 30 days. Pot B, it's 100,000 given to you every day for 30 days. Okay. So between pot A and pot B, which one will you choose?
Pot B, lor.
Okay. So 100,000, 30 days is 3 million, right?
That's going to compound faster.
Okay. This is 10 cents, right? You know what's your amount here? It's in the millions, So the point I'm trying to make is
Compound interest is the eighth wonder of the world. A lot of
Precisely.
people don't realize.
Precisely. But you see, a lot of people say that I want to have money before I start investing. But people don't realize your best ally is not resources of money, Your best ally is time, which you can't buy back.
Time.
Don't a lot of people ask me, John, why on earth do you leave a 50K job? Right. And I told
that
them,
was your salary,
yeah. When I
Well, yeah, after this, you're going to buy beer, man.
okay. But I told them, look at what you guys did. You started the podcast exactly with this.
Yeah.
Chempaka High School lah, BMW here lah.
FOMO, bro.
Yeah, FOMO, right? You know when I bought my car? I mean, you see my car, right?
Yeah.
It's a CX-5, right?
Yeah.
I bought it at 37 years old, bro. 37 years old. I was driving my hand-me-down 16-year-old Iswara for my dad for the first 5 years of my career, right? I didn't pay a single cent, right? A big financial mistake, I bought my house, which is, I advise young people, do not buy your property first. Do not lock up your money.
That is a very contrarian discussion.
Yeah,
right.
but that one, I'll go through the numbers. But so, pot A, pot B, the point I'm trying to make with this numerical example is this. Start early. The Malays even have a saying, sikit-sikit lama-lama jadi bukit, right?
Yeah.
The problem is, as humans, we underestimate what we can do in the short term. No, we overestimate what we can do in the short term, but underestimate what we can do in the long term.
We're very bad at discounting cash flow.
Very, 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 very bad. I mean, I'm pretty sure you saw some viral photos of viral Instagram posts of this lady. She has 2 million in an EPF account and came out in the personal finance, right? What is she? It's not rocket science, you know. Maximize EPF invest. And EPF, you're only compounding at 5 or 6, you know. Can you imagine if you compound at 8, 9, don't need to look for 15, 20%. You compound at 9 or 8, you already easily almost double with the same amount of time. So the point I'm trying to make is, guys,
start early, start young.
Just
Even
start
10
early.
bucks a month,
10 bucks a
$15
month. And you know why? You're not just building that compounding curve. You're building your compounding knowledge.
Okay.
Right.
Because you've got skin in the game.
Correct.
So if you're going to put $50 a month, right, where would you put it? Because you can't buy Maybank, right?
Invest $50 in books. Books. Buy books.
Okay.
Buy books. Just
well, see the thing is you got to read the damn book, right?
Yeah.
How many people buy books but they never read the book? How many people buy gym membership and never go gym, right?
Yeah. So the other way is, if you are lazy, you don't want to seek out active management or people who help you to do it, you don't want to take up classes, you don't want to grow yourself, just buy a bloody ETF. And sad to say, Malaysian ETFs are not exactly stellar in terms of performance. Yeah. Just buy a QQQ or an S&P 500 or a Vanguard dividend.
Where would you buy it?
Okay, many platforms. I mean, today, just imagine 10 years ago, Chuang, for me to start my US portfolio, I had to fly down to Singapore to open an account.
Bro, I got the form. You know that form, the WE whatever?
Yeah,
right?
W8N.
Yeah, right.
Yeah.
I got that form in 1999. I wanted to buy Microsoft.
Yeah.
I was so intimidated by the sheer complexity of. But dude, if
Precisely.
I had bought Microsoft in 1999, I wouldn't be talking to you.
You'll be playing golf today or something,
No,
right?
I'd be living in the Bahamas.
Yeah,
right?
exactly. So the point I'm trying to make, Chuang, is this. Just start, right? Buy the lowest cost. Buy the lowest cost kind of investments, which is ironically not your unit trust.
Yeah.
Because it's very high
I
distribution.
wouldn't touch unit
Right,
trust,
okay.
bro.
And today with a plethora of what you have Moo, you've got Futu, you've got Robin Hood, you've got for me
eToro.
my favorite is Interactive Brokers.
IBKR.
Yeah, IBKR. If you go and read the story of Thomas Peter Fly, the founder of IBKR, he's Hungarian. It's a very interesting story actually. By the way, it's definitely on my watch list lah. Yeah, okay, so get that. Then don't touch it for a year. Don't touch it for 2 years. Then what happens is this: you form into two camps. One is like, equity seems to be, I understand the risk a little bit better. I wanna deepen my knowledge. Then you start building on, you become a little bit more sophisticated. But other than that, which is 90% of the population, you just buy and you just let it run. You just let it run. Because to be honest, you make money not in the buying and the selling, but in the waiting.
In the holding, yeah.
Yes, that's where Munger actually, famous. I mean, Munger was so wise in his words, right? He said, why he said, if you own Berkshire Hathaway or you have an active manager, and the moment we die, just put everything into an ETF. Because he know, not because that active fund management is bad, but he knows 90 to 95% of people don't have the temperament for this game.
Yeah.
That's what he's trying to say.
They can't take the vol.
Yeah, they can't take the vault. And to be honest,
Volatility.
yeah, and to be honest, I every time I see my client, the panic ones 5% drop, they start calling me already.
Chill, bro.
Chill, bro. This is a normal day in the market, okay?
Don't even talk about crypto, lah.
Yeah.
The vol on that market is insane.
Yeah. And usually what I try to do is this. I have to remind them of stories. I tell them the stories of Adobe, the one I just told you. I told you the stories of Lululemon. Lululemon, at a peak, it was probably 520, 530. At the bottom, now it's about 400 lah. Now at the bottom it was about 280, You just imagine. So it's almost like a 60% drop, right?
60?
Yeah.
280.
208 from
520 to
520, yeah,
280.
280.
I thought you meant $2.80.
No, 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 280, 280, sorry, 280.
What's the market cap of Lululemon?
I can't remember specifically, but yeah, it was virtually almost half lah, almost half. And I just said, do you see any Lululemon going out of fashion from the yoga crowd? You go and look at yoga stores. For me, the best way for me to evaluate is you look at people wearing.
Yeah.
You go and study this.
Okay, so come back to Apple, right?
Yeah.
In my daughter's school, in fact, my son's school, if you don't use an iPhone, you're not part of the in crowd.
Oh wow.
Yeah. No,
Okay.
seriously, right?
Yeah.
So it's like, okay, well, if that at that age they are already aspiring to do this, right? And it's the whole ecosystem. It's the AirPods, it's the iPad,
Correct,
it's the phone, it's the Apple, it's the iTunes music subscription and all that, right?
Yeah.
I'm like, if at that age they're aspiring to this, class of product, right? Well, then it seems as if the investment is safe, lah.
Yeah. Correct.
I mean, I looked at them last night, right? The 3.75 trillion market cap.
Yeah. Yeah.
I mean, what the hell is?
Yeah. Yeah.
3 years ago, they were like 2 trillion market cap, 1.8, right?
At 15 years or 10 years ago, they were 400 billion and people thought they were big already.
Too big, right?
Yeah.
I know people who sold their shares because they're no longer innovating.
Yeah.
They haven't done anything beyond
Yeah.
the iPad and iPhone.
Yeah.
Hello.
Hello.
They've gone 6x. No,
Yeah.
not 6x. What is it? 400, right?
Yeah.
10x.
Yeah, 10x. 10x. And the best part is, Sir Johnny Ive left. Steve Jobs died.
Steve Jobs died, right? Oh, Tim Cook,
I
who's
bought
Tim Cook?
I bought exactly at that point.
Yeah.
You recall earlier in the podcast I said when they're on the operating table, people talk bad about them. That's the best time because it's so reverse. That's why people talk about contrarian investing. You have to go against the grain. 90% of people will tell you this way, but you have to go on this way. And again, I think I don't want to overcomplicate investing. Actually, investing is very simple. Start early, allow time to compound. Right? There's even a statistics, Chuang. If you hold a stock within a year, it's a 56% chance that you will lose money or make money. Okay, 56 to 44, sorry. But if you stretch it over 10 years, right, the chances of you losing money is 2%. 98% of the time.
Well, no, I would say because you find it easy because you've done it a long, long time.
Correct.
For the person who has never done it, it's insurmountably difficult because
Correct.
they don't understand it, right?
Yes.
So I would say this. I would say yes, follow your advice, buy the books, do the reading, do the listening, and then over time, hopefully it'll just permeate into your brain and
Correct.
you start to realize, like it took me 30 years to come to a certain realization, right? So it really, yes, you can start at 12, but then what do you buy at 12? If you buy, let's just say, Repco, I mean, it's going to go to zero.
Yeah.
Right? So you got to know what to buy, right?
And
so
actually,
it's an allocation decision.
Yes.
What do you buy?
Yes.
If you buy the wrong bloody thing,
Yeah.
it's going to go to zero.
Yeah.
Number go down.
Actually, this is a wonderful question.
Yeah.
When was the last time you went to One Otama, Chuang?
Okay, I do go there quite a lot.
You do get it quite.
Yeah.
There's one store in the New Wing that has a very long queue that sells toys. I don't know if you realize that store.
No.
It's next to Kaison.
No.
It's called Pop Mart. Have you seen it?
No.
Okay. They're actually a listed company,
Really?
right? And they have this toy called a Labubu. I don't know if you heard of it, this Labubu craze.
Might have heard of it.
Okay.
One of those young people's things.
Okay. As an investor, as a listed company, they have been giving ROIC of close to 15 to 16% over the past 10 years.
Shit,
As a
that's not
toy company, right?
Yeah.
So, to your question,
What Japanese?
Hong Kong listed.
Hong Kong listed.
Yeah.
Okay.
So, to your point about, or to your question about what to buy and all that kind of thing, right,
Yeah.
Chuang? It's very simple. Buffett actually got candy companies for their kids,
Yeah.
for his grandchildren.
Yeah.
It's something that they can relate to.
Yeah.
Look at my example. My son, he goes to, he buys snacks from Family Mart 3 times a week, right?
Yeah.
So I tell them,
Buy Equella?
yeah, that's why. Exactly my point. So and that's why I encourage every time someone wants to start investing, the first book, I don't tell them Ben Graham or
No,
Buffett.
nobody understands it.
Nobody understands it. Even securities analysis took me a while to read it. Okay.
I never finished Intelligent Investing.
Yeah.
I think I got past page 10. That's
Yeah,
like, can't do it.
Securities analysis is even worse than
Yeah,
Intelligent
yeah,
Investor. Okay.
yeah.
For me, the best book to start, ironically, is Peter Lynch.
Even
One
then,
Up on Wall Street.
Yeah, even then. I would say like for example, my kids, right? When we walk into say the Apple store, right, or we walk into like some sneaker shop like at malls or something, right? I said, look, rather than think like a consumer, think like an owner, right?
Yeah, yeah.
If you're like an investor, right, and you see what people are buying,
Yeah.
well, then rather than buy the Apple phone,
Yeah.
buy the Apple share, right?
Precisely.
And then when you start to think as an owner, as
Yeah.
a shareholder, you're like, okay.
Yeah.
Then it flips your mind, you know.
Yes.
So I try and psycho my kids, right? Don't be the consumer, because the consumer are the sheep, you know. They're 99% of the people.
They're herded this way.
Yeah. So if you see people buying this, well, how can I profit from this?
Yeah.
And buy the stuff.
You buy sneaker shoes? You
Sneakers?
running shoes?
I love sneakers. I
Okay,
buy because, yeah.
there's one particular. Okay, I'm not gonna name this company.
You should. You can make money. You should.
Actually, this stock has already 1x from my clients. It's 1x from my clients. There's this pair. They Swiss inspired, I would say.
Yeah, I think what is it? What's the company called?
It starts with O.
Yeah, I think my friend is crazy
yeah,
price on
yeah,
it.
700 ringgit per pair. Okay, most consumer companies, what they do is this: you have to get Kobe Bryant, you get LeBron James, you pay them millions in sponsorship deals, and it hits your SG&A lah, your marketing, branding costs. Okay, this company was the product was created by a triathlete. Okay, extreme sports. Cushioning was so comfortable. The best part was serious professional athletes took a look at the shoe, tried it on, wow, and they wore it to Wimbledon for free. And
Free marketing.
Roger Federer actually has a stake in this company.
Oh really?
Yes.
Piece of shit.
Yeah. and yeah, I mean, but this company just listed. Okay, this company just listed, and the beauty about it is, because the marketing cost is so low, I see them have a very long trajectory, but I don't size it that big because it's startup. It's 2 years, yes, like 5 years, 6 years. Again, there's a science to it, Wan Chuang. But again, for those listeners out there, I don't want to overwhelm you with like portfolio techniques and all that kind of thing. Just simple stuff. Start, get an ETF, put in money diligently. If you don't want to, you don't want to get into the world of investing, you know what you should do? Maximize your EPF. EPF for me has some of the best fund managers in Malaysia. Allocation, corporate governance.
So just put into your EPF.
Just pump into EPF, okay?
Yeah.
Here's the deficiency of EPF. It's locked up all the way to 60, okay? And second thing is this.
55 now?
55, yeah. Eventually it's going to go there. Lah. I'm very sure one day they'll say you can only withdraw at 60, right? I hope that they don't change it because I want to withdraw money, because I want to, the struggle is a lot of people, if you look at EPF structure, it is meant to pay a payout every year. So because of that, you look at the asset allocation chunk, 55% is fixed income. So
that's problematic.
Upside is capped already.
Yeah.
You get what I mean, right? 55%.
No, there's no upside traditionally, right?
Yeah,
it's
there's upside is
right?
capped. It's like 5-6% lah. Okay, maybe you get maybe BB, you get probably 8%, right?
Yeah.
But your upside is capped, okay? 35% is in equities, 35-40% equities. This is 35 and 40% brings in 65% of EPS income. But every year they have to mark to market, they have to sell to realize profit and all that kind of thing, right? So the equity part, because of the structure of the dividend paying every year, it doesn't allow EPF to structure a more volatile or more, I would say, a more long-term portfolio in equity. And that is, for me, that structure, nothing to do with EPF, whether they're good or bad. It's just the way the nature of the structure is. So that's the deficiency if you put everything into EPF. You have safe, right? That's why you get a 5 to 6. You want to expect to be 8, very impossible. Very tough. Unless they change the structure more into equity, but then mark to market and all that kind of thing. So second best thing, ETFs, right? Third best thing, right? If you have a knack for it, try to do it yourself, but I encourage you to get guidance. Because to be honest, I learned from a lot of mentors within this industry, a lot of mentors who are peers as well, and I'm doing this full time. Managing money is a full-time job.
100%.
There is no 100%.
Even the back end is like, that's a lot of work.
It's a lot of work. So don't be, okay, a lot of people say, hey John, but I have to pay fees. Why should I pay you fees? Okay, so I joke with them. So if you give me 100,000, the fees that we charge you is anywhere between 1.5 to 1.25%. Okay, so if we charge you 1.25% on 100,000, that's 1,200 ringgit a year, which is 100 ringgit a month. I pay my maid 120 ringgit for 4 hours to clean my house. So my joke with these clients is that you're paying me less than your maid to clean your house, and I'm trying to grow your wealth for you lah.
Yeah.
So I don't know whether that's a fair, So I leave it to them now,
Well, that's quite easier to understand lah.
Yeah, right. It's. I mean, you wash your car. I wash my car for 25 ringgit, right?
I mean, the truth is, most people cannot be their own personal money managers. They don't have the discipline.
Yes,
right?
and
they don't have the knowledge. They get scared off by the vol.
Yes.
I mean, basically, it's fear and greed, right?
Yes.
And you chase this, you chase that, then you lose out. And then the temptation to trade it, right, to take profit and then come in, it doesn't happen.
I give you a real life stats, Chuang. EPF actually had set up this scheme where they would allow EPF contributors to take out EPF account 1, buy their own stock. Buy their own stock. That means they do their own research, buy their own stock, right? 3 years, kaput.
Lost the money.
Because a lot of these guys, they will buy single stocks. They will buy 1 or 2. And
my Hokkien Mee seller said buy this one. My neighbor said
correct.
this. My friend said that.
陽光
陽光
我紅線條到這
No financial literacy.
Correct. So it bombed. Then the financial institution said, nope, no more. EPF said, no more. You have to get a professional manager to manage it for you. Yeah. And I think that's the nature of it. It's 1, full-time job, 2, temperament, 3, to be in this line of work, you really have to be a contrarian and control your emotions. I cannot emphasize this enough. I mean, I have lost enough money to tuition fees, right? Like, every time you go and see a company owner, they'll tell you pigs can fly. Or cows can fly, right? But how do you discern that? How do you make a judgment call to say, okay, I trust you on face value, but how do I verify that? What are the sources of information I read? How do I form an opinion out of this? And I think that's what, ties this whole theme of this podcast. When you retire, or what do you want to do when you find your ikigai, right? That is where you perform at your best. You have a perfect spot of where you get some income, you love what you do, you provide value to society. And that, for me, is really retirement. It's not really like you ask a lot of employees, they're unhappy today, 2 years. Chuang, last time, they said the first 2 years, you're just paying your dues, right? Only 5th year, then you really get, right? Yeah. Today, 2 years, I've got tons of experience, start shifting, job hopping. And I don't think we can change that. That's society today, right? But at the same time, are they really happy with this job hopping? Are they really finding that space? That's something that I cannot answer on their behalf. And you have to be truthful to yourself, comfortable in your own skin, all that kind of thing, Chuang. And self-preservation. Remember, we, especially Chinese, we can eat ice cream potong. Our kids eat Haagen-Dazs, right?
That's the biggest irony of all.
Yeah.
We sacrifice everything for our kids.
Correct.
We pay for their education.
Yeah.
But everything is all up in the air now. I mean, what we think is a good education, I don't think it really is anymore.
Nope.
That's the problem.
No.
We think we send them to garden school, they're going to get the best. No, I don't think so.
No.
Bro, if I shared half the stuff I know about that school, you would forget it.
Yeah, there's no way. Actually, one thing I really, I've seen some schools, Chuang, they started introducing entrepreneurial modules into their school. I think that's a good thing. Yeah. But to be able to scale that and to be able to get parents to accept that also, it's not just the students, Parents have to accept.
I disagree. I think that entrepreneurialism cannot be taught.
Oh, you think so? Okay.
No. Entrepreneurialism comes from adversity.
I see.
I think that's
you have to be pushed into a corner.
Well,
tiger, yeah.
Some shit has happened, right?
Yeah.
You've got nothing to do, but you've got to sort it out.
Yeah.
Right? If you don't do something, tomorrow you don't eat.
Yeah.
Simple.
Yeah.
And then, bloody game on. Right?
Yeah.
Do you know what I mean? Yeah.
Coca-Land, the make a lot tan. I always remember. I read the article.
The best businesses solve problems, right?
Yes, and
that is as simple as that. If you want to make money, you have to solve a problem, and you're going to do it better than anybody else.
Precisely.
Simply.
And the problem they solve, he said they were so poor. Yeah. They just wanted to provide for their family, and they started selling candy by the roadside. And when they sold to FNN, they sold it for 700 million Chuang. 3 families. 3 families, right? So he said he never imagined Coca-Land would be listed, this kind of size, FNN will be the owner. But eventually, all these guys just started with, I want to your point, adversity, I wanted to feed my family. Next thing you know, next generation, okay lah, sell lah, 700 million.
Yeah.
I don't know about you lah, bro. It's more than,
Dude,
multi-generational wealth, bro.
7 million versus 200 million per family.
700 million divided by 3, so you're talking about at least 3 million,
Yeah.
2 to 3 million
Yeah.
per family. Yeah. So
that's a lot.
yeah. So Chuang, actually our EPF is not bad. Maybe just to
Yeah, hit me some data, man.
Yeah. Actually, we are 13th largest
Pension fund in the world.
Yes.
Yeah.
And
the oldest, I think.
Yeah. And the beauty about what we do is, we have Malaysia is a bit unique because pension funds can be divided into 2 main groups.
Yeah.
First one is called a defined benefit. The other one is called a defined contribution. So let me give you an example. GWAP is a defined benefit. That means you have a pension, you know exactly how much you're going to get.
Yeah.
Everything is hands off.
Yeah.
Everything is hands off.
Yeah.
The government, there's a governing body to actually, manage your money and all that. But more and more countries are moving into what we call a defined contribution, which is your EPF, your 401k.
Yeah.
But here's the problem. EPF is kind of like a hybrid because the money is still managed by EPF in a way.
Yeah.
But a 401k, actually, if you've studied 401k systems in the US, right, you have to buy your funds, You have to decide what to buy.
Well,
what to
I've got a UK account because I used to work there, right? I have to choose my own funds.
Yeah, you have to choose your own funds, okay? So
They've all been rubbish, by the way.
yeah.
Okay?
So, you see what I mean? To our point of our podcast, right, are you actually educated enough or are you skilled enough to be able to do that? And they're placing that burden on the guy,
Yeah.
So actually the Mercer three things actually quite recently happened. One was Mercer it's a company that study remuneration for companies, salary schemes, one of the world's leading one. They came out with a global pension index, okay? Guess which country was number 1?
For what? On what metric?
They ranked them on 3 things: adequacy, sustainability, and integrity.
Don't say Malaysia.
No, definitely
Singapore.
not. The Netherlands.
Oh.
Yeah, the Netherlands scored 84.8. Okay, Iceland actually scored 83.4. Iceland of all countries. Okay, Denmark. Okay, not too surprising. 81.6, and number 4 was Israel at 80. Now, obviously, I can't go. It's a quite comprehensive report. You can download
There's
it for
a lot
free.
more to that data than
the score.
the headline number, lah.
Yeah, the
Because
headline
there's
number.
a lot that goes into that, right?
Correct. The weightage, the ranking, and all that. But what they're actually trying to say was this, in layman terms, is how sustainable is it? Because one, you have, let's say, if you have a pension fund, right? As the number of retirees get bigger and bigger, but the number of lower contributors get smaller and smaller, same to EPF problem, you will have a problem sustaining it.
At the bottom.
Yes.
So when you have less money coming in at the top, the less money you can pay at the bottom.
Right now the bottom still at least is feeding enough for the top to get out, right? Okay.
As populations drop, as working age populations
Definitely.
drop, people retire, and then the young, people don't have kids anymore.
Yeah.
And it's something that Elon Musk talks about. Right?
Yes, a lot.
Depopulation is a real thing.
It's a real thing. And here's the best part. You have to realize, on top of whatever you said, there's another very important factor. People don't contribute because they are not in normal formal employment today. A lot of gig economy guys like me and you, I stopped contributing in EPF. Okay.
Yeah. Same.
Right.
Yeah.
So you see, that base changing economic landscape is changing. So question is, sustainability is a key. Like, my parents are civil service, they're on pension, right? But I thank God
Quap
that
lah, is it?
yeah, quap. But they're at 70 plus. Can you imagine if you're 30 something? And I don't know if you followed the court case about the lady from Wisma Putra who sued the government for a pension. Do you know about the case where? So long to short of it, they changed the pension scheme where you don't get paid based on your salary increment on your scale, okay? And it was capped at 2% increment a year. And she said that it's actually, you cannot do that in retrospect. For those guys who actually signed a contract with the government back then, this was the pension scheme lah. And she won actually, she won. Court of Appeal upheld, but government don't want to pay. So just released that the judgment is going to be, it was actually supposed to be this week. They deferred it to January 16. So it will be very interesting to see. Because it's a precedent, right? And for me, this is just the first sign of things that are yet to come. Because
which is
huge. Okay, I'm going to give you numbers. when Co-op started,
So essentially, you can't outsource your retirement to a third party anymore.
Yes.
EPF ain't gonna cut it. Co-op ain't gonna cut it.
I think
You
EPF
got to
is
be-
on a much stronger footing because of
Correct,
contribution.
I understand. Yeah,
Yeah,
but
yeah.
over the longer term, you have to take control of your finances.
Correct.
You ain't got no choice but to learn yourself.
Correct. I mean, like, look at when Co-op started 2007, 41 billion in funding. Okay, the obligations was just 8.25 billion. That means the payout obligation, right? By 2040, they estimate that the payout is going to be 120 billion. So you just imagine how many times.
On what amount of funds?
Right now the fund size is about 175 on 2023 numbers.
Okay, so at 2040.
2040 they projected they're only returning roughly about 6% right now.
So is there enough money to pay the obligations or not?
I don't think they're willing to put that number
I
out.
mean, it's the same thing in the US, right?
Yes.
You've got all these pension obligations.
Yes.
Country got no money.
Yeah.
I mean,
Yeah.
there isn't enough to service these obligations.
And you see government portion, they're only contributing about $500 million a year. Federal contribution is about $500 million. Pension contribution is about 2.4 billion a year only, So that's why even this Mercer report that I mentioned earlier, right? They're already pushing to say a lot of countries cannot sustain defined benefits, which is a pension system. Yeah. They're moving more into a defined contribution. And those countries that have the Australian super, I'm pretty sure you heard of them, right? Why? Humans cannot save. They have to be forced to save either by regulation. That's what conclusion. If you look, you cut through all the fluff. Australian super grew to where? Because of law.
Yeah.
You have to mandate. So humans by themselves, they need a whip to say, please go ahead. Instead of just telling you, I whip you into like saving, whip the employer to actually contribute. That's the only way for me lah. If I were to conclude or reading all these studies or whatever, right, humans just need to be whipped to save lah. Yeah, long to short lah.
What I find really weird when I try and engage in conversations on these issues, right, these topics, 9 times out of 10, there's no interest on, It's like, but this is so material to your future, Why don't you think about it more?
Belum rasa, belum tahu mah.
Yalah.
Tak kena lagi mah.
Yalah.
Not yet lah.
Yalah.
Wait lah.
So that's the thing, I'm like,
The wake up call usually happens, when or not, Chuang?
how old? 45.
No. First stage, when they have kids, then they start sending them, they say, oh wow, it's expensive. Okay. First
Hey, bro, to deliver a child, you know how much or not?
Yeah, it's about 20K now. Yeah.
Huh? No way.
Normal is about
Normal
9.
birth is about 9.
9. Okay.
C-section?
C-section, you're talking about 20, bro.
No way. Oh my god.
Okay. So then,
20K.
bro, that's not the best part. You know what's the best part? Confinement centers. Okay.
That's gone through the roof as well.
That time premium was 20. Now normal is 20. Premium is probably at 30.
I think we paid 3,000 for ours.
Confinement lady lah that lives in.
We went to the home.
Oh wow, yeah.
Penang.
Yeah, here Chpeng, I think KL, you probably pay, I think cheapest you can get probably 15, 16. That's the low end,
My wife's retirement place that time, the cooks with the best food, man.
Yeah.
I want to eat that.
yeah. Rather than coming out, right?
Oh, so good.
Yeah.
She was staying there. I wasn't there. I would come visit.
Yeah.
The food was so good. Bro.
Yeah.
Oh my god.
Yeah.
I don't get hungry when I think about it.
Yeah, exactly. So, coming back to pensions and systems and all that, right? I think
you have to step up, man. If you don't step up,
there's two ways, like exactly how you taught your children. You can be a consumer, or you can be on the other side. You can own, right? Yeah. Similarly to this, you can play the victim mentality, go on and on, blaming the government, blaming everyone else. But it's time to start.
About it.
Yes. Yeah. And like what I said, it doesn't take a lot of money.
Yeah.
You'll be very, very surprised. If you start at like 25 and you start like 100 a month, right? Yeah. You'll be very surprised how far I can grow. I mean, like, my mentors, right? I talk to them. I actually asked them, how much did they actually started? And they have like a 9-figure, 10-figure portfolio today, right? Some of them tell me 200,000.
10 figures,
like 100 million.
Oh, that's 9-figure.
9-figure, yeah. 9-figure, sorry. 9-figure, 100 million kind of portfolio, right? They probably started 200,000, 300,000, but it took them 20 years, 25 years.
I want to ask you, since you talk about contrarian investing, right?
Yeah.
What do you think about Bitcoin?
Funnily enough, my first Bitcoin purchase when it was $10,000 US.
Yeah.
Okay.
Did you stay with it?
I had to sell because I bought more equity. I needed the money when I started.
Imagine if you kept on to that.
Yeah.
It's 10x,
Yeah, it's easily 10x. Actually, that was not the lowest price. I bought at 10.
Yeah.
But it fell to about 4 or 5.
Yeah.
I bought using credit card because I just wanted to experiment. they allowed that time. They only allow fiat onboarding, on ramp was very hard that time, right? Especially Malaysian money, right?
Which what Binance?
There was this website called Coin Mama.
Yeah, that's a lot. Yeah,
Okay,
that's a lot. Yeah.
so I didn't realize.
What year was this?
2018, I think.
18, only 18.
Yeah,
6
yeah,
years ago.
yeah,
only.
not that long ago.
Oh my god!
I
18
swiped
was
my credit card.
6,000, 4,000. How much?
Yeah,
4,000.
$4,000. So I swiped my credit card.
Now that's 25x, bro.
Yeah, and I look at my HSBC credit card charge, right? They charged me for cash advance.
Yeah.
So I
It's a
didn't
big-
know, but I
yeah.
just experimented
It's a big
lah.
whack, yeah.
It's a bit wet lah. But I just experimented, and yeah, imagine if I kept, right. But here's the thing: if you have let's say 100% of your wealth, right, you don't put it 100% in
No,
crypto
of course
lah.
not. It's an allocation thing.
You
lah,
put
right?
you put
but you should allocate
5%,
lah, right?
Yeah, I mean, for me, just out of curiosity, out of how I know Munger, Buffett, they call it a third, which is like equivalent for SHIT, right? They call it a
Say
third,
shit,
right?
shit, right?
Yeah. But for me, it's like I'm interested to see how it goes. I
So you
just
have
really,
some?
yeah, I do have dust.
Yeah,
I call it dust.
Yeah.
Yeah, dust. Dust. Dust means, in crypto terms, it's like tiny bits, right? But no, it's a technical term in crypto.
Well, your dust might be other people's trove, right?
Yeah. But again, like I said, 99% in equity because I lost a lot of money in crypto, quite a bit, 6
Were you
figures.
trading?
No, it wasn't.
Oh, that's because you didn't buy it right.
I bought into a Ponzi lah, long to short lah. I
It
bought
was a
into
scheme, is it?
It was paying, farming.
Oh.
Yeah, so you stake your coin and pay it. And my gut feel was asking me, he said, how do they pay me these returns? It was already asking my gut, but I didn't trust my gut. I used logic, right? And it didn't help that I was surrounded by crypto buddies.
Yeah. Crypto bros.
Crypto bros, equally, we lost quite a bit of money as well. Then I realized, okay, stick to your game, John, which is your circle of competence.
Stay in your lane.
Stay in your lane, stick to your game and all that lah. So to retirement, I think really to top it off, guys, just start young, start early. Don't be afraid to make.
Keep learning.
Just keep learning. You compound not just your money, you compound your knowledge. That's the most. You compound experience. I thought that when I bought my first house, I thought, wow, fantastic decision. I did a DCF on my house, my installment. If I just
worst investment.
right, and if I inverted
I
that,
didn't know any better, bro.
I also didn't know any better.
I didn't know any better.
And here's the best part.
Yeah.
Every time I had bonus whatsoever, I was such a stingy guy, right? Every single cent I earned extra bonus whatsoever, I didn't go
down
for
the
holidays. I put it back into the loan.
Yeah.
To
Pay down
save,
the loan.
pay down the loan, save
Save
interest,
interest,
right?
yeah.
Save interest.
If you had just kept on buying
Oh
Tesla
my
or Facebook or whatever,
I
right?
tell you,
Oh my
I calculated,
God.
right, at 12% compound, I would have extra 1.6 million today. 1.6
So
million.
why don't you advocate buying property?
Okay, again,
Simple answer, okay?
okay. What drives the prices of property? Ironically, is two things. I used to think it's only one thing, which is supply and demand. Actually, the second thing is this: lower value of our money. Basically, that's it.
Yeah.
You think about our inflation rate or whatever.
Yeah, it drives up prices, right?
That's all.
Yeah.
That's all. And for me, there's no living, breathing, dynamic organism. Okay, why do REITs or real estate investment trusts, why are their properties so upkept and whatsoever? You have a professional manager managing it. If you're buying for property and you're giving it for rental whatsoever, are you on the ball, cleaning it up, enhancing value?
So to me, if you want to be exposed to real estate, buy REITs.
Yes.
Easy.
Easy.
Peasy lemon squeezy.
Yeah. And you got
wanna buy
professional
shopping
managers
REITs,
there. Yeah.
Hotel REITs.
Yes.
You got like warehouse REITs, and it's great.
Yes,
It's great.
yes.
And 4 times a year,
Yeah.
you get paid, okay?
You get paid.
It's like, walao.
Yeah.
Like 4 times a year, like money lands in your bank account.
In Hokkien, we say eng cheng cheng.
Cheng cheng, right?
Yeah.
Don't need to go and chase. Have you paid rental yet?
Yeah. That kind of thing. So again, like I just did a calculation for my parents, but obviously it's their first house. It's an emotional decision. So they get paid rental 1,000 a month. Okay, the property value is about 400,000. Okay, so say you take 400,000, you put in 3% fixed deposit yield, you get how much, right? Then you calculate 1,000 divide by 1,000, 12,000 a year, divide by 4,000. That's less than fixed D yield, And then you have to chase after rental. So a lot of people, they mix up buying property as an emotional decision rather than a logical decision. They use an emotional decision but justify it using numbers. That's why they don't get the returns that they want. Yeah. And I have now property friends, they used to own 5-6 properties. They are now my clients. they look at the number and say, John, I should have listened to you earlier on, right? I should have, staked into equity and all that kind of thing. But again, it doesn't help that the banks give you leverage. Because a lot of people think that the leverage actually accelerates the return.
No.
But when you actually look out and you calculate all your costs of financing, that's where the net happens. Yeah.
Bro, there's like 5 or 6, 7 costs, You got to pay your DBK.
Correct.
You got to pay your Galian.
Correct.
You got to pay your maintenance, the roof leak, whatever you got to pay, right?
Yes.
You got to pay your bank loan. You got to pay your what do you call it? Stamp duty.
Yeah, stamp duty, MOT,
right?
all this kind of
MOT,
things. Yeah.
All these things, and then you realize yourself. And then when you want to sell, bloody hell, it takes 6 to 9 months,
Yes.
If you're
lucky, if it's a cash buyer, if it's a loan, the loan gets stuck.
Then you got to pay the agent, you got to pay the bank, right? You got to pay the stamp duty, right?
RGBT again, your tax.
Why the hell bother, man?
But you see, right? Back to my point about starting. I started off property investor.
Me also.
Yeah.
And I used to think, Chinese, right? Property, buy property.
Yeah. You can never go wrong with property.
I did well, but I could have done so much better.
Correct.
You know what I mean?
Yeah. But Chuang, I believe in the guy upstairs sometimes, regardless of what religion you have. But sometimes life takes you through this path for a reason, right?
Before you come to your conclusion.
Yes, and I think what ironically, young people today, which I thought I find it contrarian. Young people today are less risk averse to people like us, Gen X. It's already proven in surveys and all that kind of thing. But here's my challenge back to them, lah. If you don't start trying how to swim, you will never know how difficult it is, right? The learning is not through like just listening to us.
So they are more afraid of risk.
They are more afraid of risk.
Because look at the world around them, bro. There's not much to get confident about.
There's not much optimism, and I don't blame them,
I mean, you know how the financial experts talk about the boomers and the Gen Xers are the ones who they are empirically the wealthiest, right?
Yes.
And then look at these guys. They can't. I mean, just the cost of a house as a percentage of the income on an annual basis.
That's right.
It's crazy.
Yeah,
crazy.
And
right?
in Malaysia,
they can't buy a house, right?
And Malaysia is not so bad.
Wage growth is anemic, right?
Yeah.
So they don't buy a house, they don't get married, they don't have kids, and then I don't blame them. They want to just have experiences. I get it because look at the world is shit. It's shit.
And that's why, right? If popular as it is, Squid Games.
Yeah.
Right. But what was the the trigger? Because in Malaysia we don't have it as bad as people in Korea. You try to you go to Korea.
Suicides in Korea.
Exactly, because the gap is just so big for them to get. You are a graduate, okay? You don't have connections. In Korea, where I find this, actually, for me, it's very interesting to study cultures outside because it all links back, ironically, to business investments.
And economics,
right. In Korea, they have actually implemented a no last name rule for your CV.
Oh.
Because a lot of chaebols, connections, or family of who and who, or that kind of. It's very Korean culture,
I just laugh because there's only 3 surnames in Korea. Kim, Park, and
Lee.
Lee. That's it. Done. Okay?
Yeah. So they banned the last names and they use first names, and I'm like, oh. So you see, right? In investing, this is what excites me every day, Chuang. You never stop learning. Yeah. You never realize that this parameter, this information can actually give you an edge and all that kind of thing, right? And I just hope that hopefully when people listen to this podcast, listening to your journey, listening to my journey, they just get started.
Yeah.
Don't be afraid to experiment.
Yeah.
Don't be afraid to make that mistakes, because when you make those mistakes early on, right?
It's tuition fee,
Correct.
And it's gold when you're older.
Yes.
It's like getting a PhD but better, because this is the one that makes you money. Really,
a
PhD doesn't
make you money. No, a PhD will make you a slave to money.
Yeah, which is the biggest irony, right?
Yeah.
John. Okay, then you finish first.
Yeah.
You finish first. Okay.
I've never seen a successful businessman that has never failed. Long to short.
You gotta fail.
You gotta fail somehow.
And then you gotta come back like the phoenix rising from the ashes.
Yeah.
And then you go again, and then you go again, and then finally you go, and then you don't fall anymore. That's when the
Sorry, I cut you off. I wanted your point as well.
No, I used to think, how come Warren Buffett can be so old? And some of the most successful investors in the world are the damn old one. Druckenmiller, Munger, Buffett. 80s, 90s, 100s, Dalio, Rogers, all these.
I give you another one. Irving Khan. He was 103.
Irving Khan, right? Yeah. I think they're so old and they're still so healthy because their brain is churning balance sheets, churning annual reports, churning quantitative data.
Whatever your chosen field, your passion.
Your mind is look at Marian, what the bloody fella. He's so healthy,
Yeah, exactly.
But thinking every day,
his mind, I think his body may be failing him because of frail, but his mind is.
AI, he'll be the first client.
Yeah.
He's gonna change his body.
Correct.
And then he's gonna come back like Iron Man.
Yeah, exactly.
I'm serious, bro. That is coming, okay?
Yes,
It's
yes.
coming. Just swap out his body and buy a new body.
Yes, and the younger generation today, they are so enamored with short-term memory, with a lot of all this, right? Just the joy of reading, lah. Chuang, I mean,
it doesn't have to be reading, but it's information consumption.
Correct.
How you come about it, you should be platform agnostic.
Yes.
Doesn't matter where you get it from.
Correct.
But make sure the stuff is good stuff.
Yes.
From credible sources.
Yes.
And then you see what happens.
Yes. So, I didn't want to come into this podcast, when you said about retirement. I didn't want to bloom and gloom, flog the dead horse. I want to come in and say, hey, we know there's a problem. I want you guys to realize the problem.
Yeah.
What can we do about it? Start that change. That change.
Or just buy some of John's funds. Or just become a customer.
I put it this way, lah. I came into this industry to solve my own problem.
Yeah, and now you're solving others.
I'm helping solve others, and I never promised returns. I promised them one thing, Chuang, and I'm glad you asked me about my own portfolio, because I said, I promise you one thing, lah. If I screw up, my son's education fund, my daughter's education fund, my retirement fund goes up in smoke together with you. That is my deepest, most sincere promise.
Most money managers have also gone all in. Right?
Yes.
No choice. They gotta take the risk with their customers.
Because if not, then where's your skin in the game?
Yeah, I asked Teng what Teng Chi Wai, Hong DBS.
Yeah.
Last time, now
I have a lot of respect for him, though.
The fellow's done well, but he said, no, all my money's in my funds.
Yes.
All my money's in there.
Yeah.
David Ng was the same thing.
Yes.
All my money's in there.
Serious
100%,
Yeah.
100%.
Correct. Yeah, and these are the kind of people that we should emulate. Yes. Chuang, I mean, I hope that the younger generation, which is the future of Malaysia, they do better. I've always enjoyed your grilling of people and on business event. Call through the fluff, the funniest one I remember, Chuang, you know what or not? Pua of P1.
Yes, P1.
What's the name of the listed company?
Yeah.
You were going on and on about it. I was like, come on, just give him a straight answer, right? He would never give you a straight answer, right?
Yeah.
CC Puan.
CC Puan. Yes, correct.
Yeah.
Puan Chan Chong.
Yeah.
Every quarter promise to turn around one. Every quarter don't make it one. Hello.
But again, you see, you educated me on the fourth estate, and as you grow in your sophistication to the audience, as you grow as your sophistication as an investor, you have to know your rights. And I think unless we stand united, unless we stand educated, only then corporate Malaysia will be better, right? I was at an event, the Who's Who of Finance yesterday, and we were just talking about this, and I said, John, why you don't invest in Malaysia? I said, very simple. Horse, jockey, odds. Horse in Malaysia, very hard to find one. Good horse. You don't find a Meta, Facebook.
No fast. All retired horses.
Yeah, all retired horses, okay? But you can have a okay horse, but you can have a good jockey.
No jockeys.
Got lah. The Vitrox guys some lah, right? But then, at the same time, your odds are very high. So I said, you see, if you don't have these two, right, which is the maturization of corporate Malaysia, public listed companies, right? You see a lot of guys, IPO, boom, they sell. Then that's it. No shareholder value.
IPO is exit for them.
Yeah.
That's the worst thing. There's like so many times offer for sale.
Yeah.
Half the company offer for sale.
But all plays out. Here's the best part. Every time IPO, everything plays out, oversubscribe, all this kind of hype, right? But
because they take a few more years to just offload.
So I crunched some numbers. Actually, about 80% of IPO companies, right, don't after 3 years just gone, right?
Buffett doesn't buy IPO.
Yeah. I don't, right? Because you're buying, when you're selling, you as an IPO seller, you're selling at a high valuation.
Yeah,
right?
You want to get out.
Yeah.
You cash out.
Your real test is actually, when or not, the 5th year onwards. I realized that's my whole. They said, okay, this guy IPO for 5 years, probably out of the market, people don't remember them anymore, but business still going strong, numbers still going strong. I talked to the founder, and that's where active fund managers are great, because you get a lot of qualitative data that you cannot get from a report by doing investigative on the groundwork. And there's no shortcut to that, Chong. I've seen some of the best managers in Malaysia. You really have to do the groundwork. You gotta go
and see sight with your own eyes.
Yeah, and there's one guy who runs a boutique fund, Kit Sang. He was like saying, John, you ask the young analysts today where they want to go, London, Jakarta, big cities. But actually, the companies you want, you have to go to some 2-hour off-road journey, factory in the middle of nowhere, or a plantation in the middle of nowhere. And really, that's when you really get to the soul of the company. How many analysts want to do that?
Yeah, that's the industries you're buying, right? But nowadays, you're not going to get any returns from those companies, right?
Yeah. It's going to be tough, It's going to be tough,
I mean, the whole game has changed so fast. And then you got AI, right? And when the AI really comes, they will do the work of a fund manager in milliseconds, microseconds.
Yes, they give you...
They just crunch a million years worth of data.
Yes.
And a million points of data. And these are the ones to buy. This how many percent for each company?
Yeah, weightage.
And then you can even time the purchases, right?
Yeah.
Where fund manager is going to be? So John, I mean, you're a very good fund manager, but that day is coming, man. You know what I mean? And the cost is that's why AI is deflationary.
Yes.
Because the cost of everything is just going to plummet.
That's what Nvidia says, Jensen says, I want to bring the cost of compute to zero or near zero, right?
Yes.
But that's why I disagree a little bit about active fund manager going out of the way, and I tell you why. A lot of quantitative numbers are backward looking. What do I mean? Because the numbers are produced after the fact the business has done well.
Correct.
Right? But what is your leading indicators are actually very qualitative. And those are the kind of things that you need to make judgment calls. And that is where the edge is. Now, it's very difficult, very subjective to quantify, but it's like, I give you an example. Dato Sri, I don't know if it's Dato Sri or Dato Sri Cheng Value Partners, Chia Cheng Hai.
Yeah, apparently he's in the crap now, right?
Oh, really? Okay, I haven't followed him. Okay.
Yeah.
So he gave an interview.
Yeah,
Penang guy, ex-journalist,
right?
Reuters, The Star.
Yeah.
So
Chia Cheng Hai,
okay. So one of the first stakes he bought was actually BYD.
Yeah.
And
great company, by the way.
Yeah, great company. His stake was actually sold to Warren. Warren bought the BYD stake from him, actually.
Why did he sell?
Okay, so...
Okay, anyway,
But how did he get that idea in the first place was he went and visited the founder of BYD, Lee Chuan Fu, I think. I can't remember his name off my head. But he virtually just visited, said, how's your company doing, whatever. And because he built that relationship, right, what happened was he said, hey, since I know you so well, you come into my workshop. I'll show you what I'm working at. So he has a Mercedes and actually a Lexus. And he bought it not for his to drive, You know what was he doing?
Copy.
Reverse engineering.
Yeah.
Copying.
Yeah.
And this guy, Chia Cheng Hai, is straight away. How are you going to measure this on a balance sheet or a P&L? You can't, You cannot measure that kind of drive on a balance sheet or a P&L.
Once the machines can get into your mind and monitor your thoughts, that's when it gets scary.
Yes.
Because
until
when
that day
the
comes,
can just process and just understand what you're going to do even before you do it.
Yeah.
Because of your synapses. Right?
Yeah, yes.
So Neuralink, right?
Yeah,
so
Neuralink, When that happens, yes.
So then it's game over already, sorry.
But qualitatively, so far, I think the edge is still that we still have a human connection, that drive. Like what you say, entrepreneur cannot be taught,
So when you sit down with the CEO and you talk to him and you look how his eyes are, what is he going to do?
Yes.
Then you're like, okay, maybe something's off.
Yes.
You know what I mean?
Yes.
Maybe he's getting seen.
Body language is off. That kind of
he's
thing.
Uncomfortable. He's avoiding your gaze. Okay.
Yes. Yes.
Then the alarm bells go off.
Correct.
Yeah.
And your gut feel, if you watch this series called Billions, right? Bobby Axelrod said, I don't have a read. It was this famous statement. I don't have a read. That kind of intuition, you build over time one.
Yeah.
And
it's true, bro. It's true.
Yeah,
it's
you
true.
build over time one. Yeah.
So there are some traders. They told me some traders at 9:05. They don't have to look at the screen. They know what the price is already.
Yeah.
They can feel the market.
They can feel the market. Yeah. Teng Chi Wai used to say, right? I asked him in one of my podcasts before I interviewed him. The only time I could get him was because of COVID. The only then that he can lion my podcast, right? He said, "Oh, John, I've already been stabbed so many knives at the back. I mean, make mistakes. Being conned by listed companies, right? Come back to the point I made about Peter Lynch. You get 4 out of 5 right. 4 or 5 out of 10 right. More than enough. He made his day already. So then you develop intuition. Oh, this is a marker. This is a mistake or that kind of thing. Yeah. But more importantly is this. Stats is one thing. Action is another.
Yeah.
And
because there's one thing to understand what's going on, and then to act on it. That acting on it requires you to have an amount of balls, right?
Yeah.
Wow, but scared. Oh, my bay. Too high already.
Yes.
Bro, people are saying Nvidia is too high at $2 trillion, right?
Yes.
What is it now? 3.4?
Yeah. And you know their revenue, I said a lot of people, when you hear headlines that they're overpriced or whatever, do you realize that the revenue grew by 100% last year?
Right.
100%, you know.
Keep falling, right?
Yeah.
Because, right.
If you're growing 100%, that means your multiples half every year.
Yes, yes. And suddenly you're going for 50 to 25 times. And like, okay, it's not expensive anymore.
Exactly. So again, it's about how you think, how you perceive, how you act.
Like what you said, it's how you manage risk.
Correct.
Or what you perceive as risk. Right?
Correct. And if you look at last year, they were saying AMD was catching up, right? But if you read the latest tweet threads, Amazon offered two. NVIDIA chips or AMD chips. No one was buying this. What does it tell you, right? So again, no one source of information, multiple sources, verify. You
got to triangulate. You got no choice.
You got to do the work. Long to short, Kevin, my partner, who is the fund manager, he keeps on saying, John, what I do is just read. Yeah. And I form opinion, form opinion. And
what does he read? Where does he go?
Oh,
5. What the
many. So okay, so there's this thing that he does that I differ from him. How I read is I like to read more industry than go into company. He likes to read, so he'll take the annual reports of all the public listed companies in Malaysia. He will read one round.
He's still buying Malaysia.
A lot of his mandates are EPF. So no choice. A lot of my EPF clients want to go overseas, but I said I'm tight. My hands are tight too, right? Yeah, and then every time, because I conduct an AGM for my clients every year, Chong, right? I told you so, right? And it's recorded 2 years. A lot of my clients said, "Can you do the AGM more often?" I said, "Brother, a lot of data I need to crunch. I need to go and raise money and all that kind of thing." So I kind of opted that I will be giving him a quarterly kind of letter, right? And what Kelvin likes to read is he'll just read, and then he will find a pattern that this year, same company, but multiple years, do they say the same thing? Or is there something off? Then he will see something off. Is it is it been priced already in the market already? If it's not been priced, that's where he takes advantage. That's his style. For me is I look at teams. I look at industries like what I just described.
So you're macro lah.
I wouldn't say macro. Industry macro, I would say. Then I say, okay, who makes the fattest margin? Okay, these guys here. These guys make the thinnest, right? Then I go into who's the taiko here? Then I go deep. What makes him a taiko? why he can command this kind of gross margins, this kind of net margins and all that? Then I said, what makes them so special? That I try to invert. I try to invert and say, hey, why can't these guys come to this? Why can't these guys do this? And then ironically, then I look at the numbers. Numbers only make up 20% of my judgment calls. A lot of it is like reading, what makes this guy so special? Why can he price this way in... Okay, it sounds a bit crude, Teh lampa.
You got to squeeze.
Yeah, you got squeeze, right? The guys who have pricing power is all these guys like this, What makes this guy like ASML, Canon, Nikon, try to compete with them? 15 years, they already said we're 15 years behind you guys, whatever technology we have. And yeah, so I try to find...
The best brands don't drop price.
Never. So that's what gets me excited every day, Chuan. It's like I see him and then I always use him. He's the more pessimistic. I'm the more optimistic. I would likely buy at a higher valuation than him, right? His risk appetite is not so, but he keeps me in check.
You gotta have.
He keeps optimistic. And what I like about him is that, I didn't see this angle. Yeah, true. Then for me, right? For him, he's like, wow, John, because I like programming spreadsheets. Because can I build a dashboard or whatever? I said, John, you never stop learning. I said, yeah. Why? Because I don't like to do kerbal power work. Meaning, if you ask me copy and paste, do something silly, right? I said, can I optimize this? Can I optimize this? And ironically, when I do this optimization, that's where I find better ideas.
Yeah.
I find better ideas here. And then just recently, my friend, I was paying the bill at the restaurant. My friend was like, why are you taking photos? Oh, I'm taking photo of the kitchen equipment. Because that's one of the companies on my watch list. Because they make huge industrial ovens. So if you're on a Singapore Airlines flight or Silk Air or Scoot, the meal prepared was likely from the kitchen equipment that this company sells. Okay, they don't use to make small ones. So most recently, you go and see most restaurants in Malaysia, they started using them. And I was telling my mentor, and when I told my mentor, the company was PE at 24 times. Now it's gone up in price, it's PE of 34. So it's still on my watch list. I'm just waiting for mispricing to happen.
Bro, So I mean, thanks for coming.
Yeah.
We have to do another one. No choice.
More than happy to
Yeah,
come. You know,
yeah.
I mean, I always love to hear you and have this chat with you. And let 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 the audience also tell us what they want to hear, right? In a way, yeah.
I think it's just if we made them money, but if we made them help them avoid a mistake. That's
Yeah.
also worth its weight in gold, right?
Rule number 1: don't lose
Don't lose
money.
your capital.
Yeah. Rule number 2: don't forget rule number
rule
1.
number one.
Yeah.
Okay,
Such
bro.
a pleasure. Thank you so much.
Thanks a lot.
Yeah. Thank you. Yeah.